Good morning, friends. Okay, we are proceeding now to the last chapter of our discussion, which is on budgets and budgetary control. Just a minute. Okay, till now we have done six important chapters. Today, the discussion is on budgets and budgetary control, initial context setting, and then we go through the concepts and start doing problems. Now, when an organization does any planning, forecasting, that is technically called as budgeting. For an organization, for example, you are going to write your exams in the month of September or January or May. For that, you do your classes well in advance, you do your preparation well in advance, and then go and write exam. Similarly, an organization will need some guidance statement. That guidance comes through a budget. The budget will tell what an organization wants to achieve. It is going to tell how many units they want to sell, how many units they want to produce, how many laborers are needed, how many kgs of raw material is to be purchased, how many machines are needed, how much money is needed. So it's a guidance statement which is prepared ahead of time, providing a tool to compare future performance. So budget is prepared normally for a very short period or for a longer period depending on what an organization wants to do. Every company will do an annual budgeting exercise, that is 100% there. In the month of Feb or March, they may plan for the next financial year. The statement will be prepared. Budget, a quantitative or a financial statement prepared ahead of time. Ahead of time means forecasting, helps in achieving certain objective. It could be getting a specific income, specific expense, specific ROI. Video is stuck. So the objective could be to achieve a specific income, expense, ROI, ROCE, anything which an organization wants to achieve. Why should I do budgeting? See, without a budget in place, they normally say that if you plan to fail, sorry, if you're if you're failing to plan, it is indirectly planning for failure. So if a person is not doing any planning, he's indirectly planning himself to achieve a failure. So it is always critical that an organization does planning of what they want to achieve. For example, when we wanted to conduct this batch, we decided we will take specific number of chapters. The reason was very simple, because I was confident that in a given time, this much is what we can cover. So I did my own planning exercise. The planning exercise said this is what is possible. We went ahead and said that this is what we are going to do. Does the plan exactly go that way? No, I had to make a change on the last 2 days of planning, which is possible, but at least plan gave me a guidance as to what I want to do every day, how I wanted to cover, what chapters I wanted to take. Similarly, an organization would want this. An organization would want to know what they should achieve, when they should achieve, how much they should achieve, how much sales should they do, how many employees should they take. This is what's objective of a budget statement. Now, in this, we have first multiple categories of budget. One, you can classify budget on the basis of duration. What is on the duration? Short term budget, medium term budget, long term budget. You can classify budget on the basis of function, which you'll understand as we proceed, which is production budget, sales budget, raw material purchase budget, manpower budget. Like that, there are multiple categories. The first category we are going to discuss is fixed versus flexible budget, and the budget becomes the prerequisite for the another chapter which you learn, which is called standard costing. Standard costing does not exist without budgetary control. So if an organization is not preparing budgets, they cannot have something called a standard costing. So first is fixed versus flexible budget. Fixed budget says I will not have any change even with the change in level of activity. What is level of activity? Is production. Now let's just to give an example. Again, my video would have got stuck. Just give me a minute. Okay, we'll start again. Sorry about it. So I was explaining fixed versus flexible budget. Fixed budget basically says that I will not have any change in the budgeted quantum even if there is a change in level of activity. What does this change in level of activity mean, and why there is no change? Let's understand that. Flexible budget says I will change with the change in level of activity. For example, My original plan was that we will produce 10,000 units and spend rupees 1 lakh. This was the original plan of the company. Budget was produce 10,000 and spend rupees 1 lakh. Actual produced 8,000 units and spent rupees 85,000. 8,000 units and spend 85,000. Now, if you follow a fixed budget scenario, you will say your budget was 1 lakh, actual is 85,000, you saved 15,000 for the company. Budget is 1 lakh, actual is 85,000, saved 15,000 for the company. This is called fixed budget. Fixed budget does not change, with the change in level of activity. What is the level of activity? Original plan was 10,000 units, reality is only 8,000 units. Flexible budget will say for 8,000 units, the budgeted cost has to go down. How much should it go down? Depends on fixed, variable and semi-variable classification. You cannot say exactly proportionately go down. Depends on fixed, variable and semi-variable understanding. So the first concept is fixed versus flexible budget. The fixed budget basically says I will not have any change in the budgeted amount. If plan was 1 lakh and you have incurred 85,000, you have saved money. Your plan was to produce 10,000 and even if you produce 1,000 units, you will say you saved money. You will only say you have saved money. Whether your plan was to produce 10,000, 5,000, 1,000, you are only going to say you have saved money. When it comes to flexible budget, you will have to prepare a new budget. You will have to prepare a new budget for 8,000 units or a 7,000 units or a 6,000 units or a 5,000 units. In order to prepare this, what do I need? I need to classify the cost into fixed, variable and semi-variable. With that classification, we are going to do. So the concept says cost classification based on nature. All this we know. Fixed cost does not change with volume. Overall cost is constant. Variable cost directly proportional to volume. Cost per unit is constant. Semi-variable cost, neither per unit cost nor overall cost is constant, may or may not change. Splitting of semi-variable cost. Once you get a semi-variable cost, you will have to split into variable and fixed component. VC per unit is equal to change in cost by change in units, and TFC is total semi-variable cost minus the total variable cost. Very simple approach. This is something not new. We have discussed this extensively at multiple places. Let's start with a small example. Repairs and maintenance for 1,000 units is 4,000 and 5,000, sorry, for 1,000 units is 4,000 and for 1,400 units it is 5,000. If you divide and check per unit number, if it is same, it is variable. If the overall is same, it is fixed. Overall cost is 4,000, 5,000. Overall cost is 4,000 and 5,000, which means it is not a fixed cost. It is not a fixed cost. 4,000 and 5,000, not a fixed cost. 4,000 by 1,000 is 4 rupees. Can you please divide and tell me? 5,000 by 1,400. Live online guys, type it. 5,000 by 1,400. 5,000 by 1,400. 3.57. 3.57. Neither per unit is same nor overall is same. It is a semi-variable cost. It is a semi-variable cost. Now they want to know what is the cost for 2,000 units. For knowing cost for 2,000 units, I need to know the variable component. I need to know the fixed component. Variable I'll multiply with 2,000. Fixed I'll add as it is. So VC per unit is equal to change in cost by change in units. Change in cost is 1,000. 5,000 minus 4,000. Change in units is 400. 2.5 per unit. 2.5 per unit. 2.5 per unit is the variable component. 2.5 per unit is the variable component. I need to substitute this 2.5 in any one level. I need to substitute 2.5 in any one level. Whichever level I want to do, I need to substitute 2.5. So I substitute it in 1,000 units. 1,000 into 2.5 is 2,500. Fixed component is 1,500. Fixed component is 1,500. So final answer is 1,500 plus 2,000 into 2.5 plus 2,000 into 2.5. Give me answer to this. Let's see whether you're able to understand this concept. Next question. Next question. Think and then give me answer. Think. We have learnt these concepts at different places. Anyway, I'll give the answer in 2-3 minutes. The example which is presented there. Try it. We'll discuss. Okay, I've got answer, but I think that is wrong. I'll explain. Power cost is 10 lakh last year. 80% is production related. 8 lakh. 20% is employee quarters. They have not talked about anything on employee quarters, so this 2 lakh will remain same. Production doubles, 8 lakh will double to 16 lakh. Production doubles, 8 lakh will double to 16 lakh because you need more electricity now. You need more electricity. 16 plus 2. 16 plus 2 is 18. Production is doubling. So 16, 8 will become 16 and 2 will continue to be 2. 2 will continue to be 2. If they say employee quarters is increasing, then that will also change. Factory overhead is 3,20,000 for 550 units. 3,60,000 for, we'll do it together. This is the most important example for 650 units. Variable factory overhead will increase by 8%. Any change in variable cost means a change in variable cost per unit. Variable cost per unit, and fixed factory overhead will increase by 15%. Any change in fixed cost means a change in overall cost. Change in overall cost. So I have 550 units, 650 units. Let's write this. 550 units equal to 550 units equal to 3 lakh 20. 550 units is equal to 3 lakh 20. 3 lakh 20. 650 units equal to 650 units is equal to 3 lakh 60. VC per unit is equal to change in cost by change in units. Change in cost by change in units. 40,000 by 100. 40,000 by 100. 400 will give effect to change in sometime. 400 per unit. Any change in variable cost means a change in variable cost per unit. Any change in fixed cost means a change in total fixed cost. Be very clear on this concept. 400 per unit. Then comes the fixed component. So I take any one level. We'll take the level of 550 units itself. 3 lakh 20 is equal to 550 into 400 plus TFC. 550 into 400 plus TFC plus the total fixed cost. What is the total fixed cost? 550 into 400 plus total fixed cost. Five 50 into 400 is, so fixed is 1 lakh. Fixed is 1 lakh. Any doubts in this? Now I want to calculate for 850 units. For 850 units, cost for 850 units is equal to, for 850 units is equal to, cost for 850 units is equal to 1 lakh will increase by 15% and VC per unit will increase by 8%. 1 lakh will increase, fixed cost will increase by 15%. Total fixed cost will increase by 15%. 1 lakh plus 15%. 1 lakh plus 15% plus 400 plus 8% multiplied with 850 units. How much? 367, and put together is, this is what this concept is all about. The concept here is only this: change in variable cost, what you do; change in fixed cost, what you do; how you find the variable component; how you find the fixed component. If that is clear, I think there's nothing there in this chapter. Any doubts on this? Any doubts on this? Change in variable cost would mean change in VC per unit. Change in fixed cost would mean change in total fixed cost. Any doubts here? Tell me the answer to this. Let's see. There's a possibility of making mistakes here. Let's see. Do it. I'll discuss in maybe a minute or two. I've got answer from a student already. Yeah. Selling expense 20% fixed. 20% fixed, which means 3 per unit. I don't like this. 3 per unit are 60,000 rupees. I like only 60,000. 3 per unit are 60,000. This is fixed component. Variable 12 per unit into 15,000. 12 per unit into 15,000. Always be clear on the fixed cost. Per unit is always wrong. So 3 per unit is wrong. 3 into 20,000, 60,000, plus 12 into 15,000, 1 lakh 80, 2 lakh 40. Okay. Following extract is taken from the budget, overhead budget of X. Budgeted activity 50%, 75%. Budgeted overhead 30 lakh, 40 lakh. What will be the budgeted overhead for 60% level of activity? Now listen. Whenever they do not give number of units, take some assumption and proceed. So 50% is 50 units, 75% is 75 units, 60% is 60 units. 50 units, 75 units, and 60 units. We will see overall same. No, not a fixed cost. Divide and check. If it's not same, not a variable cost. Change in cost by change in units. Percentages don't work. 50 units, 75 units, 60 units. Please do it. Do it. 50, 75, and 60. 50, 75, 60. This was an MTP question. I've got the answer from live online student. Change in cost by change in units, 10 lakh by 25. 10 lakh by 25, which is around how much? 40,000 or 40,000. I substituted 50. 40,000 into 50 is 20 lakh. Fixed is 10 lakh. Fixed is 10 lakh. Variable is 60 into 40,000. Put together 34 lakh. Put together 34 lakh. Any doubts on this? Okay. Now let's do proper descriptive question. It's a very simple area. Being very clear on those two, three principles: change in fixed cost, change in variable cost, how to find FC, and how to find VC per unit. Total fixed cost and VC per unit is important. FC per unit and total variable cost is misleading information. It is a misleading information, forces us to make mistakes. Let's come to question 1. This is study material illustration number 3. Study mat illustration number 3. Let's go through this. Action plan manufacturers normally produce 8,000 units of their product in a month in their machine shop. For the month of January, they had planned for a production of 10,000 units. Owing to sudden cancellation of a contract in the middle of January, they could only produce 6,000 units in January. Indirect manufacturing costs are carefully planned and monitored in the machine shop, and the foreman is paid a 10% of the savings as bonus when in any month the indirect manufacturing cost is less than the budgeted provision. I'll read again till this. Originally, normally we produce 8,000 units. For the month of January, we have planned for 10,000 units. Some cancellation happened and we could produce only 6,000 units in January. Normally we produce 8,000. Plan was to produce 10,000. Some cancellation happened and we could produce only 6,000 units. Indirect manufacturing costs are carefully planned and monitored in the machine shop, and the foreman is paid 10% of the savings as bonus when any month the indirect manufacturing cost is less than the budgeted provision. So I have a budget, and against that, if my actual is lower, 10% of the saving has to be paid as bonus. The foreman has put in a claim that he should be paid a bonus of 88.50 for the month of January. Foreman is a person who is working in the company. He is saying, give me a bonus of 88.50. Works manager wonders how anyone can claim a bonus when the company has lost a sizable contract. The owner is little worried, or the works manager is little worried that how can somebody ask for a bonus when we have lost a sizable contract. Now, this is an expense for a normal month. Normal month is 8,000 units. 5290. 5290 for 8,000 units with various items. Foreman salary, indirect labor, indirect material, lot of things are there. For January, plan was 10,000 units, 5875. I am the foreman. Reality is 4990. I just compared this. 5875 minus 4990. I am the foreman. I just compared this. 5875 minus 4990. We have saved 885. Pay bonus 10%. This is the only argument as a foreman I am putting. 885 saved. Give me 10% bonus. No other argument. I am not bringing any other argument. Now, this was for 10,000 units and actual is for 6,000 units. So, do you agree with the worksman manager? Is the foreman entitled to any bonus? Substantiate your answer with facts and figures. Now, we have to answer whether bonus is to be paid or not. Now, for doing this, you'll have to use the concept of fixed budget, flexible budget. What the other guy is saying is, compare my 6,000 with the budgeted 10,000. Compare my actual 6,000 with the budgeted 10,000, which is not logical. So then what we have to do, we have to prepare a flexible budget for 6,000 units. We have to prepare a flexible budget for 6,000 units. If the budgeted amount is more than 4990, I don't know what amount it will be. If it's more than 4990, foreman will get bonus. And if it's less than 4990, foreman will not get bonus. Now for doing that, I have to go with every item. Salary of foreman, I'll check. Overall same for 8 and 10. Don't look at 6. 6 is actual. Actual is of no use. I'll compare 8,000, 10,000, because in actual you could save money or you could spend more money also. If overall is same, it is fixed. 1,000 fixed. Divide and per unit same, variable. Neither of them same, semi variable. Neither of them same is semi variable. First one is for 8,000. Second one is for 10,000. We have to prepare for 6,000. We have to prepare for 6,000. Now right. Flexible budget. Flexible budget. Flexible budget. for for 6000 units, for 6000 units, particulars calculation amount, particulars calculation amount for 6000 units, particulars calculation amount, fixed cost, leave maybe some 10 lines gap, 8 lines gap, variable cost. If any semi variable is there, you can write it as a separate line item, or you can break it also into fixed and variable. Semi variable either separate or break. I'll break it. Solution would write it as separate line item. That's okay. We'll go item by item. Salary of foreman. Don't look at the last column because in actual cost can go up, cost can go down. 1000. Salary of foreman 1000 for 8000 units, 1000 for 10,000 units. So 6000 also 1000 only. Salary of foreman is fixed in fixed cost. Salary of foreman 1000. Salary of foreman 1000. Salary of foreman 1000. Second item, indirect labor. 720 by 8000 in the calculator. 720 divided by 8000. 0.09. 900 by 10,000. 0.09. Exact. Don't look at actual. Actual is of no use. Exactly 0.09. Exact amount. Not even rounding of difference. Exact amount we are getting. It is variable. It is variable. This is in fact a very important question. Very simple. But this test most of the crux. Indirect labor 0.09 into 6000. 0.09 into 6000. Divide exact same, then it is variable. Overall same, then it is fixed. Neither of them same, semi variable. 540. 0.09 into 9000 into 6000 into 6000. 540. Next one, 800 by 8000. Check in the calculator. Exact same you have to get. 800 by 8000. 0.1. 1000 by 10,000. 0.1. Exactly same. Exactly same. 0.1. Next item, repairs and maintenance. 0.1 into 6000. 600. 0.1 into 6600. Name is in, sorry, okay, sorry, indirect material, sorry about indirect material. 0.1 into 6000. Clear? Can you proceed? Repairs and maintenance. 600 by 8000 you check, you get 0.075, and 650 0.065. Not exactly same. I want exact same. Again I'm repeating, exact same. So come down, leave maybe another 4-5 lines. Note 1, analysis of repairs and maintenance cost. Analysis of repairs and maintenance cost. When we divided, we got 0.075, 0.065. VC per unit is equal to, VC per unit is equal to change in cost by change in units. Change in cost by change in units. Change in cost by change in units. Change in cost is 50 rupees. Repairs and maintenance different. Don't look at actual performance, okay? 8 and 10. 8,000 and 10,000. If they give budget for 6,000, then you can look 6,000 also. Actual, I cannot look at. Difference is 50. Difference is 2,000. 50 and 2,000. 0. We need to substitute in any one level. We need to substitute this in any one level. I can substitute it in 8,000 or 10,000. I substitute this in 8,000. Substituting this in 8,000 units. In 8,000 units. 600 is equal to 8,000 into 0.025 plus TFC plus total fixed cost. plus total fixed cost. Tell me the fixed cost figure. 400. I'll go to the main working note. I can write single item called power cost in in repairs and maintenance called in semi variable, or I can write variable in variable component, fixed in fixed component. Either ways it is same only. Either ways it is same. Your wish how you want to write it. Now in the printed solution I've written the other way around. Now write fixed R&M cost, fixed repairs and maintenance cost, fixed repairs and maintenance cost 400 rupees. Fixed is 400 rupees. And this side variable repairs and maintenance 0.025 into 6000, 0.025 into 6000. Alternatively you can add both of them together and add both of them together and write it in the category of your semi variable cost. Next one is power cost. Power cost divide first. 800 by 8000, 875 by 10,000. Divide. Are you getting exact same? No. Again analysis. Note 2. Analysis of, I'm not getting exact same number. 800 by 8000 is 10 paise. 875 by 800 by 8000 is 10 paise. 875 by 10,000 is 8.75 paise or 0.0875. Analysis of power cost. Analysis of power cost. VC per unit is equal to change in cost by change in units. VC per unit is equal to change in cost by change in units. Change in cost is 875 minus 800. 875 minus 875 by 2000. 75 by 2000. 0375 per unit. 0.0375 per unit. This concept, the fixed versus flexible, is very simple. Question keep coming in. We should be done maybe in another 45 minutes or so, and then functional budgets only will be pending. 0.0375. Substituting this in 8000. 800 equal to 8000 into 0.0375. How much is the fixed component here? 500. Let's take it up. Power cost, fixed power cost, note to 500. Variable power 0.0375 into 6000. How much? 225. Any doubts in this? Clear? Thereafter it's simple. Tools consumed, divide and check. Tools consumed, please divide and check. 320 by 8000, 400 by 10,000. Exact same variable. Tools consumed, tools consumed, tools consumed 0.04 into 6000. 240. Tools consumed 240. Tools consumed 240. 0.04 into 6000 into 6000. Clear? Then we have depreciation fixed, insurance fixed, rates and taxes fixed. All the three are fixed. Rates and taxes, amount as such as it is. Depreciation 800. Insurance 100. Total fixed cost. Number may not match with the printed material because there I have done three-way categorization. 2950. Total variable cost. Total variable cost 1755 and total cost 4705. 4705. Now against 4705 we have incurred 4990, no bonus. Against 4705 we have incurred 4990, no bonus. No bonus. Against 4705 we have incurred 4990. Any doubts on this? Clear? Come to question 3. Question 3, again a very good question. Test your knowledge. Question number 4, it is going to test the understanding of your changes in cost also. ABC Limited is currently operating at 75% of its capacity. In the past 2 years, level of operation was 55 and 65% respectively. Presently, the production is 75,000 units. 75%, 75,000 units. In the past, we have operated at 55 and 65. Company wants to do now 85% for the coming year. Cost details: 55 given, 65 given, 75 given. Any two levels we will take, divide. Per unit same, variable. Overall same, fixed. Neither of them same, semi variable. Then after that, following increase in cost also to be done. You also have to do increase in cost. What are the increase in cost? Material cost will increase by 8%, labor cost will increase by 5%, variable factory overhead by 5, variable selling overhead by 8, fixed factory overhead by 10, fixed selling overhead by 15, administration overhead by 10. Prepare flexible budget at 85%. Also ascertain profit and contribution. They have asked us to calculate profit and contribution. Profit and contribution. This is the requirement of the question. Clear? Okay. Let's start directly. Nothing much for us to do. We will take for analysis purpose two levels. The two levels are 65 and 75. You can take any two levels. Okay. 65 and 75 or 55 and 75, 55 and 65. This is 55,000 units, 65,000 units, 75,000 units. Question wants us to do it for 85,000. Question wants us to do it for 85,000. First thing, identify variable fixed. Second, give effect to change. Give effect to change. Semi variable, split, give effect to change, and then do the budgeting. This is what I had taught you when I did that 1-2 MCQs. It's not new for us. Let's start. Flexible budget. Flexible budget at 85% capacity. Flexible budget at 85% capacity, in bracket 85,000 units. Particulars, calculation amount. Fixed costs, leave some 7-8 lines. variable costs, fixed and variable, fixed and variable, 85% capacity, we have to prepare a budget. Let's take 55, 65 for analysis purpose. Any two levels I have to take. 11 lakh by 55,000 and 13 lakh by 65,000. Divide and check. Are you getting same number? 11 lakh by 55,000, 13 lakh by 65,000. Same 20 per unit. That I have to give effect to the change. Any change in variable cost means a change in variable cost per unit. Any change in variable cost means a change in variable cost per unit. In the variable cost, write direct material 20 plus 20 plus 20 rupees plus. There's an increase of 8% into 85,000. 20 plus 8% into 85,000. 18 lakh 36,000. 20 plus 8% into 85,000. Clear? Next one is direct labor. Please divide and check. Divide and check. Are you getting same per unit number? Should be same. 5 lakh 50 by 55,000, 10 rupees. 6 lakh 50 by 65,000, again 10 rupees. Again 10 rupees. Direct labor in the variable cost. 10 rupees plus 10 rupees plus 5% into 85,000. 8 lakh 92 500. 892 500. 892 500. Any doubts on this? Clear? Factory overhead, question itself is talking about variable as well as fixed. Should be semi variable. You divide and check. Divide and check, should be semi variable. Factory overhead should be semi variable because question is talking about variable and fixed in the increase. 3 lakh 10 divided by 55,000 is 5.63, and 3 lakh 30 divided by 65,000 is 5.07. So come down, note 1, leave some 7-8 lines. Note 1, analysis of factory overheads. Analysis of factory overheads. VC per unit is equal to VC per unit is equal to change in cost by change in units. Change in cost by change in units. Change in cost by change in units. 20,000. Any two levels I take. 330 minus 3 lakh 10. 65,000 minus 55,000. 2 per unit. 2 per unit. Clear? Substituting VC per unit in 55,000 units. Any one level you can substitute. VC per unit in 55,000 units. In 55,000 units. Substituting VC per unit in 55,000 units. 3 lakh 10,000 is equal to 55,000 into 2 plus fixed cost. 55,000 into 2 plus fixed cost. How much is the fixed component? Any doubts on this? Fixed cost is 2 lakh, variable is 2 per unit. Fixed cost is 2 lakh rupees, variable is 2 per unit. Now I'll give effect to the percentage change. I'll give effect to the percentage change. Let's go to the main working note. Any doubts on this? In the fixed cost, right, factory overhead first. 2 lakh plus some change they have given. 2 lakh plus 10%, and in variable also factory overhead. 2 rupees plus 2 rupees plus 2 rupees plus 5% into 85,000. 178 500. 178 500. Concept is very simple. Questions keep coming in this area. Students struggle. The biggest challenge you will face is when units data is not there, which also we will see as we proceed. Any doubts on this? Next one, do analysis of selling overhead. Again, there is a variable and fixed component. Do selling overhead analysis, VC per unit and TFC calculation. Selling overhead, VC per unit and TFC computation. Live online guys, type it if you're done. VC per unit and TFC component for selling overheads. If you've got it, let me know how much is the VC component. 40,000 by 10,000, 4 per unit. I substitute in 55%. TFC is 1 lakh. Total fixed cost is 1 lakh. Variable cost per unit is 4 rupees. 1 lakh and 4 rupees, and then you have to give effect to change now. 1 lakh and 4 rupees, then have to give effect to the given changes. Fairly simple, straightforward concept this is. I write here selling overhead 1 lakh increases how much? 15%. I've got the answer in live online 1 lakh 15, and this is 4 plus 8% into 85,000, which is 367 200. 4 plus 8 percentage into 85,000 into 85,000. 4 plus 8 percentage into 85,000. Any doubts on this? And the last item is admin overhead. Overall is same 160 160. Admin overhead overall is same 160 160. So just give effect to the addition, that's all. Admin overhead, total fixed cost, total fixed cost, how much? 5 lakh 11,000. Total variable cost, sorry, 32. Okay, 74 200. Total variable cost is 32 74 200. 32 74 200. Any doubts on this? Total cost, add profit, total sales. Total cost, add profit and total sales. 37, 85, 200. Total cost, add profit, and then total sales. Profit, the question has said, profit is 20% on sales. I don't know the sales number. So, sales is 100, profit is 20 on sales, cost is 80. There's a usual adjustment. Sales is 100, profit is 20, cost is 80. 47, 31, 500. Doesn't end here. Question has also asked for contribution. Contribution is profit plus fixed cost or sales minus variable cost. Both are same. Sales minus variable cost or profit plus fixed cost. Profit plus fixed cost. Just write that alone. Contribution, profit plus fixed cost or sales minus variable cost. Sales minus variable cost or profit plus fixed cost. 1457 300. Any doubts on this? Clear? Can you proceed? Similar question is this. This question came in your September 24 MTP, which is similar. Question 5. I am not going to do the entire requirement. I know what I want to discuss here. I want you to estimate. I want you to estimate only three things. Direct expenses, one item I want you to estimate. Factory expenses, second item I want you to estimate, and office and administration expense. These three things please estimate. Only these three things I want you to estimate. They have said calculate the budgeted profit for FY 21-22. Not interested. Prepare an expense budget on marginal costing basis. Marginal is sales less variable cost, contribution less fixed cost and profit at 50% and 60%. I want you to do it at 60% capacity. At 60% capacity, tell me what will be the direct expenses for FY 22-23. FY 22-23. Okay, just a minute, FY 22-23 direct expenses, factory expenses, office and admin expenses, and sales. Four things, please estimate. I give you around 3-4 minutes. Please start estimating it. I'll discuss. Four things you have to estimate at 60% capacity. Start doing it. I'll discuss it in 3-4 minutes. So first thing we have to identify is units. 50% equal to 60,000. 60% is equal to 72,000. First thing you have to do is number of units. 50% is equal to 60,000. 60% is equal to 72,000. Direct expense, if nothing is mentioned, is a variable cost. It is a variable cost. 60 per unit they have said. So 60 plus 20%, 60 plus 20%, which is 72, 72 into 72,000. 72 into 72,000, which is the answer I've got in live online, 5184. When it comes to factory expenses, there is a fixed, there's a variable. Variable component is 60 rupees, 25% fixed of the 80. So 75% is variable. Fixed component is not 20 per unit. 20 into 60,000, 12 lakh rupees. 20 into 60,000, 12 lakh rupees. 20 into 60,000, 12 lakh rupees. In the 12 lakh, add 15%, 13 lakh 80. Add 15%, 13 lakh 80. And for 60, add 20%, and again do into 72,000, same 5184, same 5184. When it comes to office and administrative expenses, 100% fixed, 20 into 60,000, first 20 into 60,000, 12 lakh, increase by 15%, 13 lakh 80, and sales is 72,000 into 880, 72,000 into 880. Any doubts on this? Any doubts on the concept here? Okay, nothing much for you to do. If something is to be done, I'll tell you. A department of company X attains a sale of rupees 6 lakh at 80% of its normal capacity, and its expenses are given below. Office salary 90, general expenses is percentage of sales. Anything which is a percentage of sale is a variable cost. Anything which is a percentage of sales is a variable cost. Depreciation, rates and taxes should be fixed in nature. Selling cost, everything variable. Wages is given. Prepare flexible administration, selling and distribution cost budget operating at 90, 100, 110. Just tell me what will be the sales at these numbers. That's all. Tell me the sales. 90, 100, 110. How will you get sales figure? Calculate. 90, 100, 110. What will be the sales figure? Sales figure. How will you compute? 90, 100, 110. Sales figures for 90, 100 and 110. Tell me for 90%. That itself is 6 lakh 70. The logic is very simple. 80% equal to 6 lakh. 80% equal to 6 lakh. 90% equal to question mark. 90% equal to question mark. Once you get that question mark number, for general expenses, take sales and do it. Others take as it is. Others take the fixed number as it is. Any doubts here? Okay, this came in September 24 exam. We are going to do this now. Savi Limited is currently operating at 80% of its capacity level. It was a good question. Furnish the following information for the current period, working at 80% of its capacity level. Production or sales 96,000. Whenever you read the question at the back of the mind, do some calculation. 80% is 96,000. So 100% is 1,20,000. Direct variable cost, factory overhead 8 lakh 40. I don't know whether it is fixed or variable. We'll see. Administration overhead in bracket fixed. Sales commission 2% of sales value. So this is variable. This is fixed. This is variable. I don't know about this. I don't know about this. We'll see. Transportation expenses, loading capacity 4,000 units. 4,000 per truck. In short, 4,000 rupees for 4,000 units. In short, 4,000 rupees for 4,000 units. Selling price of the product is 120. Variable factory overheads are 80% variable in nature. Okay, they have mentioned 80% is variable, 20% is fixed. Management of Savi Limited has come to know that there will be high fluctuations in the demand of the product in the upcoming year, and it would not be an easy task to predict the demand. Selling price will not be affected by the demand fluctuation. Decided to prepare a flexible budget at 60, 80, and 100%, 60, 80 and 100%. You are required to prepare the flexible budget showing the total cost of the product at each level. We will do only 60%, only 60%. 80 I don't want to do, 100 also I don't want to do, only 60% we will do. Certain information has been given, we have to do the forecasting of that. They want us to prepare a flexible budget. I have sales information, so we'll write sales, we will write variable, we'll write fixed and get to the profit figure. Clear? Working note 1, flexible budget at 60% capacity, 60% capacity, 60% capacity, 80% equal to 96,000 units, 60% equal to question mark, 80% equal to 96,000, 60% equal to question mark, 72,000. Particulars calculation amount, particulars calculation amount, particulars calculation amount, fixed costs, leave some 4 lines or 5 lines, variable cost, fixed cost and variable cost. First item is direct variable cost 20 per unit, direct variable cost 20 per unit, variable cost 20 per unit, 20 into 72,000, 20 into 72,000, 14 lakh 40,000, 14 lakh 40,000. Next item is factory overheads 8 lakh 40. I cannot write 8 lakh 40. They have said 80% variable. For that, I'll get VC per unit. 80% variable, I'll get the VC per unit. 20% fixed as it is, we will write because no changes there. So go here first, write factory overheads in the fixed side. In the fixed side, factory overheads 8 lakh 40,000 into 20%. No change, nothing, just 20%. That's all. 168. 8 lakh 40,000 into 20%. This side 8 lakh 40,000 into 80%. This is of no use to me. Divide this by 96,000 units. Divide this by 96,000 units. This will give me the per unit number. Because direct variable cost, they gave 20 per unit directly. So this first I want the per unit number. Without per unit number, it is of no use. How much? Into 72,000. 5 lakh 4,000. Again, I'm repeating, very critical. You get VC per unit, total fixed cost. VC per unit and total fixed cost 5 lakh 4,000. Then we have administration overhead, which is fixed in nature. Admin overhead fixed in nature 20 lakh 60,000. Admin overhead fixed in nature 20 lakh 60,000. Then we have sales commission, which is variable. Sales commission is 2% of sales. So 2% into 72,000 units into 120 rupees. 2% into 72,000 units into 120 rupees. 172,800. Clear? Then transportation expense, you cannot say it is 1 per unit. I was explaining as 1 per unit. Why I cannot say 1 per unit? Let's understand. Assume I'm going to sell 5,000 units only. If we sell 5,000 units, my truck expense will be 4,000 rupees into two trucks. 4,000 rupees into two trucks, which will become 8,000. 5,000 units, but cost will become 8,000 because first truck fully used, second truck only very limited quantity we are using. So first we have to decide is how many trucks we need. How many trucks we need? Once we get that number, then we do the multiplication procedure. How many trucks do we need? How many trucks do we need? So here it says 4,000 per truck and capacity is 4,000 units. 72,000 by 4,000 is exactly 18 I need. Exactly 18 I need. If it had come in rounded of now 18.23 means you round off to the higher number and then the cost will also increase accordingly. So truck expenses variable. Truck expenses variable. 72,000 by 4,000 into 4,000. 72,000 by 4,000 into 4,000 into 4,000. Add up the cost. That's all I think. We don't have any other expenses. Total fixed costs. Total fixed cost. How much? 22 lakh? 28,000. Total variable cost. Total variable cost. How much? 88. 800. Live online guys, please type it. Total costs. Total cost. Total cost. 44. 16. 800. Profit and total sales. It can be loss also. Profit and total sales. Sales is 72,000 into 120. 86 lakh. Is there any other cost there? Looks a huge profit. Yeah, I don't see anything else. So, okay, only cost level they have done. Okay, question asks only you are required to prepare a flexible budget showing total cost. Showing total cost. Okay, we have done till the overall level. They ask only total cost. Any doubts on this? Any doubts on this? Clear? Can you proceed? Just give me a minute. Okay, I'll come to question 8. Let's discuss this question. Aman International School has a total of 180 students consisting of 6 sections with 30 students per section. The school plans for a picnic around the city during the weekend to places such as Prayag Zoo, Capri Park, Azad Planetarium. Private operator has come forward to lease out the buses for taking the student. Each bus will have a capacity of 50, excluding 2 seats reserved for the teacher. The school will employ 2 teachers, paying them an allowance of 500 per teacher. It will also lease out the required number of buses. So, some planetarium they want to take, 180 students are there. You have to take buses. The capacity of the bus is 50. 2 teachers will be accompanying them. This 2 teachers seats is other than that 50, and every teacher you have to pay 500 per teacher. Following are the various expenses. Cost per student: breakfast, lunch, tea, entrance fee, rent, permit fee, block entrance fee, prices to students for games. No other cost is to be incurred. A flexible budget estimating the total cost at 60, 90, 120, 150 and 180. Compute the average, compare the average cost, and what will be the break even. This is what I want to discuss. What will be the break even if the school proposes to collect 400 per student? If the school proposes to collect 400 per student, what will be the break even point? What will be the break? That's the important discussion. Others is fairly simple. I'm not doing the other discussion. 60 students. 60 students if we have, we will need 2 buses. 60 students if we have, we will need 2 buses. 90 students, 90 students also 2 buses. 90 students also 2 buses. The capacity of the bus is 50. So 0 to 50, 1 bus, 51 to 100, 2 buses, 101 to 150, 3 buses, 151 to 200, 4 buses. So 60 students, I will need 2 buses, 90 students, 2 buses, 120 students, 3 buses, 150 students, 3 buses, 180 students, 4 buses. What are my expenses? 180 into number of students. 50 for breakfast, you can write separately also into number of student. Rent 6,500 into number of buses, could be 2 buses, 3 buses, 4 buses. Teacher cost 1000 rupees per bus, 1000 rupees per bus, because 2 teachers per bus, 2 teachers per bus, 1000 rupees per bus into number of buses, 2 buses, 3 buses, you multiply. Special permit fee 500 into number of buses. Block entrance fee same, 2500 for all the situation, 2500, and prices to students 500 for all the situation. So this is a question where fixed cost, what is fixed cost? Block entrance fee, prices to students, special permit fee, rent, teacher allowance can change based on the number of buses we are taking, can change based on the number of buses we are taking. So assuming this part you are able to do in exam properly, these are the numbers. I have teacher allowance, rent, permit fee, block entrance fee, prices to students. If we have technically 2 buses, it is 19,000 rupees. 2 buses is 19,000. Same 19,000 at 90 students also. If you have 3 buses, it is 27,000. I don't know how to do this calculation, okay? 27,000. Again 3 buses, 27,000. And if you have 4 buses, it is 35,000. 4 buses, it is 35,000. Every student 180 is variable cost, and then I have buses also fixed cost only. Buses also fixed. The only problem is moment you exceed 50 students, number of buses increase, total cost go up. So that is why ICA has classified this as semi-variable. There is some variable component, there is some fixed component, but for all analysis purpose, it is like a fixed cost. It depends on number of student, 1 to 50, 1 bus, 51 to 100, 2 buses, 101 to 150, 3 buses, 151 to 200, 4 buses. So we do all this calculation. I am going to collect 400 per student. If I have 60 students, I will have loss. If I have 90 students, I will have profit. 120 students loss. 150 students profit. 180 students profit. This is what the calculation is saying. The calculation is saying depending on the number of students, the bus cost per student will go down. Indirectly, the bus cost is dependent on how many students we are getting. Many times the school will say we will take students only in multiple of 50. Why 50? If I have 50 students, 1 bus. I have only 1 more extra student, the school may discourage that student and say we don't want you, because 51st student unnecessarily 1 more bus expense I have to incur. But if I have 20-30 more students, maybe the second bus I will take it. So here every 50 students fixed cost changes. Every 50 students fixed cost changes. Question has asked for break even point. Now headache. Break even point formula is fixed cost divided by contribution per student. And when I ask fixed cost, 2 buses means fixed cost is not only 3,000, okay? Semi variable cost is also fixed only, because that changes with the number of buses. So if I two buses are there, 19,000. 3 buses are there, 27,000. 4 buses are there, 35,000. 5 buses, 6 buses, 7 buses, it can keep going on. It can keep going on. So they have asked for break even point, but I have a headache here. The headache is the number of buses do not remain same, and if number of buses do not remain same, my fixed cost do not remain same. Any doubts till this? Clear? So how will we do break even point in this situation is what I want to explain. Break even point, fixed cost by contribution per student. What is contribution per student? 400 rupees minus 180 rupees. Minus 180 rupees. 400 minus 180 rupees. But how do I calculate? How do I calculate? The main problem for me, the main problem here for me is how do I go ahead and calculate? How do I go ahead and calculate fixed cost by contribution, because fixed cost keeps changing. Now write particulars and 3-4 columns. Question number 8. computation of break even point, of break even point, of break even point, particulars 51 to 100 students in bracket 2 buses, 51 to 100 students in bracket 2 buses. I have not done 1 to 50 because it starts with 60 students in the question. So maybe minimum 60 students are there. 51 to 100 if I have 2 buses. 101 to 150 students if I have 3 buses. 151 3 buses, and 151 to 200 students if we have, we will need 4 buses. 2 buses, 3 buses and 4 buses, and 0 to 50 if you have, you will need 1 bus. Fixed cost. This number you will get if you have done the statement. I didn't want to spend time on that. Fixed cost is nothing but 3,000 rupees plus 16,000. 3,000 plus 16,000, 60 students and 90 students. This is the class interval, second bus class interval. This is the third bus class interval, and the last one is the fourth bus class interval. So we have totally 3 class interval. I have 2 buses, 3 buses, 4 buses. Can there be the fifth bus? Yes, possible if you have 210 students. Question has not talked about. Their maximum is 180 students. Here, my fixed cost is 16,000 plus 3,000. 19. 16 plus 3, 19. Then we have 24 plus 3, 27. And then we have 32 plus 3. To put it simply, every extra bus cost me 8,000 rupees. Every extra bus cost me 8,000. There is some 6,500 rent, 500 some permit, and 2 teachers. 2 teachers. Contribution per student 400 minus 180. 400 minus 180. Please divide, you will get break even point. You will get break even point in every class interval. Multiple break even points are there. 86.36 rounded off to 87. You can do 86 also. 122.73, 123, 159.09, 159 or 160. Now what this means is, let's understand the concept here. This is the most important discussion. If I am going to go to the second class interval, that is if I am going to take the second bus, if I am going to take the second bus, I need minimum 86 students. That is why at 60 students, my cost is 496. At 60 student, my cost is 496. I'll be making losses. At 90 students, my cost is 391. I'll be making profit. So if I need the second bus, minimum 86 student, else I will not take the second bus. I have to take the third bus, minimum 123 students, else I will not take the third bus. And if I have to take the fourth bus, minimum 160 student, minimum 160 student, else I will not take the fourth bus, else I will not take the fourth bus. Any doubts on this? Clear? Can we proceed? Any doubts on the concept here? Yeah, technically it's a break for me, but you are going to do question. I want you to do question 9. I will, after you first do flexible budget for both the product before the proposal and after the proposal. Part 2 is what I want to explain, but it's technically a break for me. I wanted a 10 minutes break, but you are going to do this question in 10 minutes. I'll discuss the solution here. It's not a break for you. Start doing this question. They have asked us to do a flexible budget before the proposal and after the proposal. Before the proposal, some units are sold. after the proposal something else is sold and some changes they have talked about. I want to explain, advise the company whether the proposal should be accepted or not if they are independent and not independent. That's the part I will take you through. You're going to take 10 minutes of time. I'll be back by around 11:45. Please start doing it. Clear? Okay. Now, the reason for discussing this question is for part 2 mostly. Part 1, they have given sales, raw material cost multiply with the units, labor cost multiply, variable overhead multiply, fixed overhead is given. Company has received a proposal that if you incur 16,000 extra, 16,000 extra, that will be added to your fixed overheads, and 17,000 extra, sales will increase by 10%. But for this, variable overhead will also be increased by 20%. Any change in variable overhead means change in variable overhead per unit. So originally my profit is 1 lakh and 92,400 and it becomes, sorry, originally 1 lakh and 2 lakh 80, originally 1 lakh and 2 lakh 80, and later on it becomes 92 and 294, 92 and 294. So I'll go product wise. They've said advise the company whether the proposal should be accepted or not. Any doubts in any of these items? I don't see any major confusion, but if there is a doubt, let me know. Any doubts in any of this? If the products are independent and not independent, if they are independent, separate decision making for X, separate decision making for Y. For X, proposal is rejected. For Y, proposal is accepted. If the products are independent, separate decision making. X rejected, Y accepted. X rejected, Y accepted. And if they are not independent, then you have to do total profits. What is total profit? 1 lakh plus 2 lakh 80, 3 lakh 80 earlier. And now 92 400 plus 294 250, put together 386 650. For both the products, proposal is accepted. For both the products, proposal is accepted. If they are not independent, accept for both or reject for both. Accept for both or reject for both. Any doubts on the concept here? Any doubts on this? Clear? Okay, let's come to 10. This is SM case scenario 1. Very good question, very well drafted by ICA, slightly lengthy problem. We'll read it together and then start doing it. It may take away 20 minutes of ours, 20 to 25 minutes. Maharatna Limited, a public sector undertaking, produces product A. Company is in the process of preparing its revenue budget for the year 2022. Company has the following information which can be useful in preparing the budget. It is anticipating a 12% growth in volume from 2021. So sales will increase by 12%, units increase. Sales price is 23,000 per ton, will be increased by 10% provided wholesale price index increases by 5%. What is wholesale price index? Is inflation. If inflation is going up by more than 5%, selling price will increase by 10% is the question's information. To produce 1 ton of product A, 2.3 tons of raw material are required. Raw material cost is 4,500 per ton. Price of raw material will also increase by 10% if WPI, if the wholesale price index increase by 5%. And the next line says WPI increases only 4%. WPI increases only 4%, which means no change in selling price, no change in purchase price, no change in selling price, no change in purchase price. 6,000 employees will work for the company 26 days in a month. 6,000 employees, 26 days into 12-month payment. 85% of the employees are permanent, getting salary as per a 5-year wage agreement. Getting salary as per a 5-year wage agreement. Earnings per man shift. Man shift means an employee work for a shift of 8 hours. Technically earnings per day. Earnings per day is 3,000. The new wage agreement will be implemented from 1st July 2022. New agreement from 1st July 2022 where 15% increase will be done. Where 15% increase will be done. 3,000 per day you pay per employee, but after 1st July 2022 you have to do a 15% increase. Casual employees are getting a daily wage of rupees 850. The wages is linked to CPI. The casual employees are non-permanent are getting 850, but their wages is linked to CPI. CPI is consumer price index. If CPI goes up, 850 will go up to 870, 880, 890, 900, 910. Power cost for the year is 42 lakh for 7 lakh units. 42 lakh for 7 lakh units. What is 7 lakh units? Is not the production. 7 lakh units is 7 lakh units of EB. 7 lakh units of electricity. This MCQ we saw when we were doing. 60% is used for production purpose. So if production goes up, this power cost will go up. And remaining is for employee quarters and administrative office. Remaining is for employee quarters and administrative office. This cost will not go up. This cost will not go up. We saw this in an MCQ when we were doing it. During the year, I paid 60 lakh for safety and maintenance work. This will increase in proportion to production. Production goes up by 12%. This will also go up by 12%. Company has paid 1 lakh 20 for the purpose of purchase of diesel to be used in hired car. The cost of diesel will increase by 15%. During the year, I also paid 6 lakh for car hire charges. In the year 2022, company has decided to reimburse. During this will attract 5% GST on reverse charge mechanism. What is this and all? I'll not spend time, but I'll do whatever they have done. Reverse charge mechanism and all you would have learnt in your GST. Depreciation is 80 crore 40 lakh will be 15% lower. They want a budget for the year 2022. This in your study mat is in MCQ form. They would have given 5 MCQs. I've removed the MCQ question, but it can come as 5 MCQ and also show the budgeted profit or loss for the year. I'll do budget for 2021 as well as 2022. When we do it together, we'll be able to get. We'll start with sales, deduct every cost which is given in the question. Working note 1, flexible budget. That should be the last question in flexible budget. Flexible budget for 2021 and 2022. They've asked only 2022. Particulars 2021, 2022. Particulars 2021, 2022. First line item, direct material. Direct material. Item by item, we'll keep writing it. In the end, we'll get the profit. Last year, my production was 4,20,000 tons. This year, production will increase by 12%. Production will increase by 12%. I need to produce 1 ton of product. I need 2.3 tons. I need 2.3 tons to produce 1 ton of product A. Raw material cost is 4,500. Price will increase. All that is not happening here. No increase in price. So earlier we did 4,20,000 into 2.3 tons into 2.3 tons. In fact, before starting this, number of units produced, just write this. This will be starting 4,20,000, 4,20,000, and other side is 4,20,000 plus 12% growth. 4,20,000 plus 12%. 4,70,400. Direct material 4,20,000 into 2.3 into 2.3 into 4,500. Final answer, let's write it in lakhs, okay? Let's not write so many zeros. 4.2 into 2.3 into 4,500. 43,470 lakhs. 43,470 lakhs. 470,400 into 2.3. No increase in price. No increase in price. 48,686.40 lakhs. $48,686.40 lakhs. The numbers are huge, so may take a little bit more time at our end. If the WPI increase was more, our purchase price would have gone up. Any doubts in this? Given effect to point number 1, point number 3, point number 4. 1, 3, 4 is given effect. Point number 5, I have 6,000 employees. In that, 5,100, 85% employees, 85% employees are having the fixed permanent job. They are getting paid 3,000 per day. They are getting paid 3,000 per day, but this will be there only till June 2022, only till June 2022. From July there is an increase. From July there is an increase. Direct labor, underline that. Permanent employees, ignore the 2021. I think it will not serve any purpose. Ignore 2021. I don't know why I started with ignore it. We are not going to do 2021. It will be just waste of time. Permanent employees. Now listen, I have 6,000 employees. 85% are permanent. 85% are permanent. So 5,100. Listen for some time. Into these employees will be paid for 26 days in a month. For 26 days in a month at the rate of 3,000. For 26 days in a month at the rate of 3,000. So into 26 days, into 6 months, into 3,000. Then plus same thing will repeat, but it will be 3450. 15% increase from the month of July 2022. 15% increase from the month of July 2022. From the month of July 2022, we have totally 6,000 employee, 26 days in a month, 26 days in a month, and we are paying them 3,000 for a shift of 8 hours. Earnings per man shift per day. Per day you are paying 3,000. Write this. 2021 also I can do, but I don't see any use as of now. I've ignored it now. Do the calculation. Tell me final number in lakhs. This is the number I get, but you check and let me know. The numbers are huge, so it is going to be extremely time consuming activity. Yeah, okay. Someone has confirmed in live online. This is the number. 51,316.20 lakhs. Any doubts on this? Any doubts on this? Clear? Can you proceed? If I had to do it for the previous year, 5,100 into 26 days into 12 months into 3,000 into 3,000. Casual employees. Casual employees. Permanent employees, this is the calculation. Now listen, casual employees, 900 employees will be there. The only thing is they will not be paid 850 rupees. Their wages is linked to CPI. Their wages is linked to CPI. What is CPI linkage? 165 points, 850 rupees. If points go up, wages has to go up. Wages has to go up. So somewhere you have to first do this calculation. Let me know what is the number. 165.17 is equal to 850. 165.17 is equal to 850. 173.59 is equal to question mark. What is the number you get? 850 and this is question mark. What is the number? 165.17, 850, 173.59 question mark. Give me a 2 decimal answer. 893.33 is what a live online student has confirmed. So here 900 into 26 days into 12 months into 893.33. 893.33. 900 employees, 26 days, all 12 months, no 6 months here. Here they have not given saying that increase from July 2022. Earlier they said increase from July 2022. This there is no increase from July 2022. Linked to CPI. Linked to CPI. CPI is consumer price index. So 850 is going up. 850 is going up. Write this down. 2508.47 is the number I get. Divide by 1 lakh. We are doing it in lakhs. 2508.47 lakhs. Ideally, I could have done particulars calculation amount. I don't know why I opened 2021. That the calculation column can show all these workings, and then you can write it in the amount column. Any doubts on this? Clear? Next is power cost 42 lakh for 7 lakh units. Units is not production. 7 lakh units of electricity. 1 unit is equal to 1 kWh. In that 60% is for production purpose. That will go up because production is going up, and remaining is for employee quarters. Remaining is for employee quarters. I've already done this in an MCQ form. Power cost. Power cost for production. Power cost for production. Power cost for employees. Power cost for production. Power cost for employees. We incurred 42 lakhs last year. 42 lakhs into 60%. This will go up by 12%. This will go up by 12%. 42 lakh into 60% go up by 12%. 28.22. 28.22. I can write one more decimal also, that's okay. Depending on what is there in the MCQ answer, it was an MCQ question. 28.22. 42 lakh into 60% plus 12%. Why plus 12%? As production goes up, this cost will go up. In the MCQ, it was doubling of production there. And others is related to employee quarters. 42 lakh into 40%. 16.8. No change in this. 42 lakh into 40%. Into 40%. Any doubts on this? Next is safety and maintenance. This will increase in proportion to production. Safety and maintenance 60 lakh last year will increase because of production going up. Will increase because of production going up. During the year 2021, company paid 60 lakh for safety and maintenance. Amount will increase in proportion to the volume of production. Safety and maintenance 60 lakh plus 12%. 67.2. 67.2. 67.2. Clear? Now comes this part, little bit of discussion is needed. Company paid 1,20,000 for the purchase of diesel. Cost of diesel will increase by 15% in the year 2022. Cost of diesel will increase by 15%. So last year 120, this year it will be 138. 138 doesn't end here. Company also paid 6 lakh for car hire charges in the last year. This year also have to pay. During the year 2021, the company paid 6 lakh for car hire charges. So car hire charges is 6 lakh excluding the fuel cost. In the year 2022, the company has decided to reimburse the diesel cost to the car rental company. Reimburse. So to the car rental company, I have to pay 6 lakh for car hire charges. I have to pay 1,38,000 for diesel. And on this, I'll have to pay 5% GST extra. On this, I'll have to pay 5% GST extra under reverse charge mechanism. So what will I pay to the car rental company? 6 lakh for car hire charges. This could have also gone up, but nothing is mentioned in the question. Diesel reimbursement will go up. Earlier 1 lakh 20. Now we are doing reimbursement. Earlier we may not be doing reimbursement. Now we are doing reimbursement of diesel. We are doing reimbursement of diesel, which is 1 lakh 20,000 earlier, goes up by 15%. Goes up by 15%, which is 1 lakh 38,000. And on top of it, I have to pay 5% GST on reverse charge mechanism, for which I cannot claim any input tax credit. For which I cannot claim any input tax credit. Now, this reverse charge mechanism you would have understood in your GST subject. Basically, I'll have to pay this for reimbursing this diesel cost and the car hire charges. Next, right? Car hire charges 6 lakh plus another 1 lakh 38, and on top of this 5% GST. On top of this 5% GST. 6 lakh plus 1 lakh 38 plus 5% GST. 5% GST. 6 lakh plus 1 lakh 38 plus 5% GST. I'll repeat again, car hire charges you have to pay. On top of it, you'll have to reimburse the diesel, which is going to increase by 15%, and 5% GST on these two amounts together. Is it 36? All put together 775 is right? 7.75 all put together, right? ठीक है 7.75. Next is depreciation. Last year 8040 lakhs. 8040 lakhs. This will go down by 15%. Go down by 15%. 8040 minus 15%. 8040 minus 15%. 6834. Please, can you add up all the cost? Total cost. Add up the cost. If somebody has completed, let me know in live online. Add up all the cost. Yeah, tell me the number. Somebody please add it and tell me the total. Please add all the numbers. 109 465 point. I'm getting this 465.04. I'm not sure. This is the total I got. Can you guys again check? Somebody has to confirm me the total. I'll also check it again. 48 686.4, 51316.2, 2508.47, 28.22, 16.8, 67.2, 7.75, 6834. This is the number I am again getting. 109465.04. Well, let's see. Should be this number 109465. Yeah, 109465.04. 109465.04. 109465.04. Profit, total sales. Profit and total sales. 109465.04. It's a very well drafted question. Only thing is, numbers, if they were little smaller, it would have been easier for us to do. Numbers are huge. And if you don't do it in lakhs and you write zeros and all, then it will be a very huge number. 109,465.04. Sales is 470, 400. 470, 400 into 23,000. No increase in price. 470, 400 into 23,000. It's a loss making situation. 108, 192. It's a loss making situation. Clear? Any doubts on this? Very well drafted question. Any doubts on this? A slightly lengthy computation, that I cannot help it. The computation, the figures are on the bigger side, so that you will have to manage it. Any doubts on this? Can we proceed? Clear? Can we? Okay, with this, my discussion on fixed versus flexible budget is over. If you want, you practice this question 11, which came in May 24 exam. But again, simpler only, nothing much tricky. Only thing you will have to always ensure is if they give any fixed cost per unit, please convert into total fixed cost and then do the analysis. That mistake students make, I cannot help it there. FC per unit has to be converted into TFC for doing any analysis. With this, our discussion gets over on fixed versus flexible. Now I come to functional budget. Before we take the lunch break, we'll try to do at least one or two questions. Maybe two questions I'll do, and then post the break we'll see. Now let's discuss functional budget. What is functional budget? Is budget for various functions of the company. Now what are the various functions in the company? It can be a sales function, it can be a production function, it can be a finance function, it can be a marketing function, it can be a research and development function, it can be a maintenance function. Anything which an organization does, or has a separate department can be called as a function. Primarily, these are the functional budgets we prepare. We start with sales budget, order of budget. We start with sales budget. Based on sales budget, we prepare production budget. How we do? When I did EOQ, I was explaining that I'll do sales plus closing stock one side, opening stock plus production other side. So sales plus closing stock minus opening stock. Production will give me raw material consumption. Production into input by output ratio, and raw material consumption will give us raw material purchase. Just give me a minute. Raw material consumption will give us raw material purchase budget, which is your raw material consumed is equal to opening stock plus purchases minus closing stock. Opening stock plus purchases minus closing stock. So using the formula, you'll be able to get to this. Separately, production budget can give me manpower. What is manpower? Is how many employees do I need? My employees requirement depends on how much production I'm doing. Employees requirement depends on how much production we are doing. This is broad discussion. Okay. Now, whatever functions, whatever budget you prepare, if you consolidate them all together, that is called as a master budget, or technically called as a master P&L. Master budget or a master P&L. When you club them together, it is called as a master budget or a master profit and loss account of a company. A question may ask you for a master budget also. We'll see one of the question around that. So primarily we will be preparing a sales budget. Based on sales, we'll prepare a production budget. Based on production, raw material consumption, raw material purchase, raw material and manpower budget. Are these the only budget? No. ICI in one exam asked a cash budget, which is learnt in financial management. You learn that in financial management, but they ended up asking that in costing cash budget in this chapter of budgets and budgetary control. Can they ask it? Yes, because in the functional budget, one of the budget is cash budget. So they end up even asking a cash budget in exam. So anything can be tested, but concept is very simple. There is an order. Sales gives production, production gives consumption, consumption gives purchase, and production separately gives manpower. Sales budget is very simple. It will have only three line items: unit sold, selling price, value of sales. Unit sold, selling price, and value of sales. This has to be done for FG1, FG2, FG3, FG4. Whatever finished product are there, you have to do it for a finished product wise. FG1, FG2, FG3, FG4. One thing is, unit sold will mostly be there in the question. If it's not there in the question, you have to go through marginal costing. What is marginal costing? Is sales to achieve desired profit, profit plus fixed cost divided by contribution per unit. It didn't end here also. In one of the exam question or in your study mat, you have multiple products. There were three products. Then what you need to do? Contribution per set approach or composite PVR approach. Contribution per set approach or composite PVR approach. Get the answer in set. BEP in set we learned where we said fixed cost divided by contribution per set. Same logic you'll have to apply here. Fixed cost plus desired profit divided by contribution per set. Once you get that, sales, add closing stock, less opening stock gives you production. If you know the cost per unit, you get cost of production. If you don't know, we leave it at production. From this, production into input output ratio, raw material consumed, cost per unit, value of raw material consumed. The only thing is, this is for FG1, FG2. This is for raw material 1, raw material 2. Raw material 1, raw material 2. So if you have multiple FG, then for every FG you have to write production of FG1, input output ratio, raw material consumed. Leave a line. Production of FG2, input output ratio, raw material consumed. Production of FG3, input output ratio, raw material consumed. The production and the input output ratio has to be written for every combination of finished product and raw material. Raw material 1 with FG1, raw material 2 with FG1, raw material 1 with FG2, raw material 2 with FG2. Like this, you'll have to do add up all of them together. That will give you total raw material consumed. If you have the cost per unit, get the value of raw material consumed. Once you have this, raw material consumed is equal to opening stock plus purchase minus closing stock. This goes to the other side. This goes to the other side. Raw material consumed plus closing stock minus opening stock is purchases. Along with this, ICI exam question can ask you something called as price source ledger. What is price source ledger is which we do in raw material chapter. They may end up even asking price source ledger where you have to write particulars, date and particulars, receipt, issue and balance. Quarter one receipt. What is quarter one receipt? Quarter one purchase. Quarter one consumption. Quarter two receipt. Quarter two consumption. Quarter three receipt. Quarter three consumption. Quarter four receipt. Quarter four consumption. They may ask you to follow FIFO method. They may ask you to follow LIFO method. They may ask you to follow weighted average cost method. Apart from this, there is a manpower budget. Manpower budget is continuation of my budget 2. Continuation of my budget 2. What is budget 2? Is production budget. Budget 2 is production budget. So production into hours required per unit, total hours. Then I can divide by how many hours an employee will work. This will tell me how many employees are needed. This will tell me how many employees are needed. More or less same format we will follow. Only thing is you can have multiple FG. If you have multiple FG, this 3 item you have to write for every finished product. Production of FG1, hours per unit, hours required. Production of FG2, hours per unit, total hours. Production of FG3, FG4, FG5, FG6, FG7, FG8. There's no end to this. There's no end to this. This will keep happening. This will keep happening. Every product you have to write this. Every product you have to write this. Clear? Able to understand till this? Any doubts in this? Let's see an example. Let's see for some MCQs and then we'll come to descriptive. Variable cost per unit 1000. Total fixed cost 20 lakh. Estimated sales 100 lakh with a profit margin of 20%. Calculate the number of units to be sold by the company. This came in one of the exam requirement, but not like this. Variable cost, they gave lot of item, material, labor, like that. They gave lot of item. Now my estimated sales is 100 lakh. Profit margin is 20%, which means cost is 80 lakh. And what is 80 lakh? 1000 into number of units plus 20 lakh. 1000 into number of units plus 20 lakh. 1000 into number of units plus 20 lakh. So 1000 into A plus 20 lakh is equal to 80 lakh. Can you tell me the answer to A? Please tell me the answer to A. A is the number of units. 1000 into A plus 20 lakh is equal to 80 lakh. A is the number of units. How much? 6,000. Any doubts on this? Sales is 14,000 units. Stock increased by year end 160. Post production rejection rate, a new variable. Post production rejection rate is 4%. What should be the production? Normal formula for production is sales plus closing stock minus opening stock. Sales plus closing stock minus opening stock. So sales is 14,000. Closing minus opening is 160. Increase by year end. Increase by year end means closing is more than opening. Closing is more than opening. What is closing? I don't know. What is opening? I don't know. Closing minus opening is 160. If it is increasing, closing minus opening is positive. And if it is decreasing, closing minus opening is negative. So in an ideal situation, I should produce 14,160 units. In an ideal situation, I should produce 14,160 units. Closing stock, add, that is sales, add closing stock minus opening stock. My production should be 14,160. Surprise element rejection. Now what is the use of rejection is, always when you have rejection, understand like this: production less rejection, good units. 100 is production, rejection is 4%, good units is 96. I want this to be 14,160. I want 96 to be equal to 14,160. I need 14,160 good units because I can sell only good units, and stock also only good units. Stock also only good units. So I want 14,160. 96 equal to 14,160. What is 100? Tell me. 96 equal to 14,160. What is 100? I've got the answer in live online. I'll produce 14,750. In that 4% will get wasted. 14,750 minus 4%, do in calculator. 14,750 minus 4%, 14,160. In this 14,000, I will sell 160 stock increase. 160 is stock increase. Always, whenever they give any wastage or anything, assume something is 100 and then do the calculation. Any doubts on this? Let's see. Let's see how are you getting this. It's a slightly tricky question. Production is equal to sales plus closing minus opening. That's the only thing I can tell. Try doing this. 2 minutes for you. Sales plus closing minus opening. Production is equal to sales plus, okay, some of you have answered it in the live online. Production equal to sales plus closing stock minus opening stock. Sales is given in the MCQ 48,000. Closing stock is 0.10p. 0.10p and opening stock is 0.10p goes to the other side. 0.90p is equal to 44,100. P is equal to 49,000. P is equal to 49,000. Any doubts on this? All these you will see when I do problem are different trickier adjustments in different questions. Opening stock is 20,000. Closing stock is 4 days of sales. Closing stock is 4 days of sales. Sales of 1 month is 2,50,000. Sales of 1 month is 2,50,000. What should be the production? What should be the production? Right? Production equal to sales plus closing stock minus opening stock. Sales plus closing minus opening. Sales plus closing minus opening. Sales is 2 lakh 50. Sales is 2 lakh 50. Closing stock is 25 days 2 lakh 50. 4 days question mark. Closing stock 25 days 2 lakh 50,000. 4 days question mark. 4 days question mark. What's the number you get? 40,000. 40,000. Opening stock is 20,000. Opening stock is 20,000. What's the number you get? Any doubts on this? Okay, again, this is a very tricky one. A company is manufacturing 1 lakh units of product A. I'll take you through. This is a very good adjustment. 1 lakh units of product A. It needs 2 units, 3 units, and 5 units of X, Y, and Z. It needs 2, 3, and 5 units of X, Y, and Z. Till now, when I read, I can say it needs 2 lakh of X, 3 lakh of Y, 5 lakh of Z, 1 lakh unit, 1 lakh unit, and it needs 2 units, 3 units, 5 units of component X, Y, and Z. 2 lakh, 3 lakh, and 5 lakh. Z is not available outside. Z is not available outside, and it is to be made what? In-house. It is to be made in-house. 4 units of Y are needed to produce 1 unit of Z. 4 units of Y are needed to produce 1 unit of Z. How many units of Y are required by the company? No opening stock, closing stock adjustment not there. That and all is not there. I have to produce 1 lakh units of A. I'll keep explaining it. If you have a doubt, let me know. I have to produce 1 lakh units of A. To produce that, I need 2 lakh X, 3 lakh Y, 5 lakh Z, 2 lakh X, 3 lakh Y, 5 lakh Z. I need 2 lakh X, 3 lakh Y, 5 lakh Z. This is the requirement. 2 lakh X, 3 lakh Y, 5 lakh Z. In this, X go and buy it from outside. Y go and buy it from outside. Z cannot be bought from outside because it's not available outside. It's not available outside. They're saying component Z is not available outside and it is to be made what? In-house. It is to be made in-house. Why are we doing this analysis? Ultimately, we want to know how many units we have to buy from outside. This will come as part of raw material purchase budget when you do a question. Ultimately, I want to know how many units I have to buy. 2 lakh of X you have to buy, 3 lakh of Y you have to buy, but 5 lakh of Z you cannot buy. To make 5 lakh of Z, to make 5 lakh of Z, I will need some Y. To make 5 lakh of Z, I will need some units of Y. I will need some units of Y. Which what will I do? I'll have to buy it from outside. Which I'll have to buy it from outside. In fact, this was a part of a EOQ requirement. Then ultimately they'll ask EOQ, square root of 2 into annual demand into ordering cost per order divided by carrying cost per unit per annum. For 5 lakh Z, I need 20 lakh Y. I need 20 lakh Y. 4 is to 1. I need 20 lakh Y. 4 is to 1. So 20 plus 3, 23 you have to buy. 20 plus 3, 23 you have to buy if you have to manufacture 1 lakh units of product A. 1 lakh units of product A, 2 lakh of X, 3 lakh of Y, 5 lakh of Z. 2 lakh of X, 3 lakh of Y, 5 lakh of Z. Z cannot be purchased from outside. You will see this question when I later on show it to you. It will be part of EOQ computation. It will be part of EOQ computation. 5 lakh Z translates into 20 lakh Y purchase. So put together, I need 23 lakh. Any doubts on this? Clear? Give me answer to this. This you should be able to do. You should be able to do. This should be fairly simple. Try it. I've got the answer in live online. Small concept related question. If full clarity is there, the chapter becomes very easy. Another minute and I'll discuss it. Live online, guys. Only one student has confirmed. Others done, not done. You're finding it difficult. 9,70,000. We have produced 3 lakh units. 3 lakh into 3. 3 lakh into 3 is raw material consumption, which is 9 lakh. Add closing stock 90,000. Deduct opening stock 20,000. Deduct opening stock 20,000. This is a very good question. Let's see this now. And the time required to produce actual output is 80,000 hours. Time required to produce actual output is 80,000 hours. This 80,000 they will not give directly, you will have to calculate. It's a part of a bigger problem. Target efficiency of worker is 80%. We saw the formula of efficiency when we did labor chapter. I'll anyway explain the formula again. Target efficiency is 80%. If people are 80% efficient, it means they will not be able to do it in 80,000 hours. They'll take more time. They will take more time. I am giving you 80,000 hours, but you are very clearly telling I'm not fully efficient. I'm not fully efficient. Efficiency is only 80%. We learned this formula there. Efficiency is equal to ST by AT or AO by SO. These two formula we saw there. Efficiency is equal to standard time by actual time or actual output by standard output. Till this when I read, I find 80% is equal to 80,000 by 80. 80,000 by 80. So 80 will become 1 lakh hours. 80 will become 1 lakh hours. I give you 80,000 to do a work and you are taking 1 lakh hours and you are 80% efficient. 80,000 hours I gave you and you took 1 lakh hours. You took 1 lakh hours. Again I repeat, efficiency equal to standard time by actual time, where we saw in the labor chapter. In the labor chapter. In addition, there will be a non-productive downtime. Non-productive downtime of what? 20% of the hours actually worked by the employee. I gave you 80,000 hours. You took 1 lakh hours to complete it. You are not sitting idle and all. You are doing work and you took how many hours? 1 lakh hours. Then you are saying, I took 1 lakh hours, but in that 1 lakh hours, on top of it, there's a 20% productive downtime, non-productive downtime. What reason we don't know, could be power failure or something. So 1 lakh plus another 20% of 1 lakh, 1 lakh 20,000 hours it will take. 1 lakh 20,000 hours it will take. What will be this calculation? This will be part of manpower budget. This will be part of manpower budget, where they'll ask ultimately what is the labor cost or number of employees. Any doubts in this? So I will need 1 lakh 20,000 hours. Give me answer to this. You should be able to do it. If your understanding of labor chapter is good, you should be able to do this. Try it, try it. Try it. And I'll explain, but should be in a position to do. This chapter can get over even with MCQ itself, because I know the kind of questions which we are going to discuss, and almost all major adjustments I've converted into MCQ. I'll explain. I have to produce 1 lakh units, so I will need 2 lakh hours. I'll need 2 lakh hours. In the 2 lakh hours, 1 lakh 60 will be normal time. What is normal time? Is 1000 employee into 160. 1000 employee into 160. Balance is going to be overtime. Balance is going to be overtime. Normal time we will pay 20 rupees. Overtime you have to pay 30 rupees. Overtime you have to pay 30 rupees. This also got tested in one of the budgetary control statement. Any doubts on this? Clear? Just give me a minute. This is not needed. Okay, with this, my MCQ discussion is over. The last MCQ was very simple. This was an RTP MCQ. Let's do now at least one descriptive question before the break, and then we'll see. Let's come to 12. I'll first give you time 2 minutes to read the question. It's a lengthy question always. First read it. 2 minutes for you to read the question. This is illustration number 4 of study material. Okay, I'll start reading it now. A single product company estimated its sales for the next year quarter wise. So sales is given. From sales will go to production, from production to consumption, consumption to purchase, and separately manpower if the question says quarter 1, 2, 3, 4. Opening stock is 10,000, closing stock is 16, 250 at the end of the year. Production pattern for each quarter is 80% of the current quarter sales, 20% of the next quarter sales. Normally what will happen is production will be equal to sales plus closing minus opening. They have not given stock data every quarter. What they have said, for every quarter my production is equal to 80% of the current quarter sales and 20% of the next quarter sales. Opening stock of raw material, closing stock is given. Company proposes to purchase the entire annual requirement for the full year. Whatever I want to buy, I'll buy it in the first 3 quarters. First quarter 30%, second quarter 50%, third quarter 20%, 30, 50 and 20% with their purchase prices given. Value of opening stock, production budget in units, quarter wise production budget in units only. Raw material consumption budget only quantity, quarter wise. Raw material purchase budget quantity and value. Price toast ledger under first in first out method, which we will only discuss. We are not going to do price toast ledger. Clear? Let's start. Working note 1. Production budget. Production budget. Particulars and 4 quarters. Particulars and 4 quarters. Particulars and 4 quarters. Normally budget format for production is sales plus closing minus opening, but I do not have stock data quarter wise. What question has said is production is equal to 80% of current quarter sales and 20% of next quarter sale. Production pattern of each quarter is based on 80% of the sales of the current quarter and 20% of the sales of the next quarter. So 80% of current quarter, 20% of next quarter sales. 80% of current quarter sales, 20% of next quarter sales. 80% of current quarter and 20% of next quarter. In this calculation, I know the sales figure every quarter. So let's do that. 80% of current quarter, 30,000 into 80%. 37,500 into 80%. How much? 37,500? 30,000. 41,250 into 80%. 80% of current quarter. Any doubts on this? 80% of current quarter. Clear? And 20% of next quarter. Q4 we will get stuck. I'll explain what to be done. 20% of next quarter. 37,500 into 20%. We will get stuck in the last quarter. I'll explain there. Last quarter we will get stuck because I don't know the Q1 sales of the next year, not current year. Q1 sales of the next year. Q1 sales of the next year is not available. 80% of current quarter done, 20% of next quarter also done, but stuck with quarter 4, stuck with quarter 4, which is where I have opening stock of FG and closing stock at the end of the year. So below the table we will do production for the year is equal to sales for the year plus closing stock of the year minus opening stock of the year. Opening stock of the year is available, closing stock of the year is available, sales for the year. That will give 4 quarter production. I know 3 quarter number, 4th quarter balancing figure. 4th quarter balancing figure. Next, total and come down. Production for full year is equal to sales for full year plus closing stock at end of year minus opening stock at beginning of year. Production for full year is equal to sales for full year, closing stock at end of year, opening stock at beginning of year. Opening stock at beginning of year. Add up the 4 quarter sales. Add up the sales of the 4 quarters. Live online guys, type it. 4 quarter sales add up. 153,750 plus 153,750 plus closing stock at end of year. Closing stock at end of year is 16,250. Closing stock at end of year is 16,250. Opening stock at beginning of year is 10,000. Opening stock at beginning of year is 10,000. 1,60,000 is the answer given by a student. Now please write total for Q1, Q2, Q3, Q4 balancing figure. Last quarter balancing figure 160 minus all of this. Last quarter balancing figure. Confirm if these numbers are right. Anybody getting any different number, let me know. Clear? Ideal situation you will see in maybe next question where they'll give stock data every quarter. So add closing stock of quarter, deduct opening stock of quarter, and we'll get the sales info. We'll get the production information. Any doubts in this? Working note 2. This is production budget. Second, they've asked for raw material consumption budget in quantity. Raw material consumption budget in quantity. Purchase budget in quantity and value. Working note 2. Raw material consumption budget, particulars in 4 quarters. Raw material consumption budget, particulars in 4 quarters. Particulars in 4 quarters. Raw material consumption budget, production input output ratio, raw material consumed. We will see a question where we have multiple finished product that will make the calculation little lengthier. This is single product only. Production input output ratio, raw material consumed. $31,500, $38,500, $42,000 and $48,250. Input output ratio, somewhere it would have been mentioned in the question. How many units of raw material needed for 1 unit of output? How many? 2 kg. 2 is to 1. Each unit of finished output requires 2 kg of raw material. 2 is to 1. 2 is to 1. 31,500 into 2 by 1. Into 2 by 1. Production into input by output. Input by output. Clear? Any doubts on this? Can you proceed? Working note 3. Raw material purchase budget, both quantity and value needed. Raw material purchase budget, particulars. I'll write 4 quarters, but technically only 3 quarters answer will come. 4th quarter we are not buying anything. Particulars in 4 quarters. 4th quarter will not be needed. Particulars in 4 quarters. Now what question says is, the company proposes to purchase the entire annual requirement in the first 3 quarters. Entire annual requirement. What is annual requirement? Annual consumption plus closing stock at end of year minus opening stock at beginning of year. What is the annual purchases? Annual consumption plus closing stock minus opening stock. Once you get that, into 30 into 50 into 20 into 30 into 50 into 20. Leave some 7-8 lines. I think 7 lines come down. Annual purchase is equal to annual consumption plus closing stock minus opening stock. Annual purchase is equal to annual consumption plus closing stock minus opening stock. Okay, there is an error, I think a student has highlighted. Is this 38,250? One student is highlighting me. Q2 production 38,250, is it? Can you check the calculation? Yeah. Yes, 8250 then. Thanks for highlighting it. 38,250. Then is this also changing? Ideally this should have also changed, but okay, that time I don't know, nobody highlighted. 48,250 is right, but this is 38,250. This is 38,250. I bring it here. 38,250. 76,500. 76,500. 76,500. Yeah. Yeah, thanks friend. Annual purchase is equal to annual consumption plus closing minus opening. 3,20,000. If you add the 4 quarters, you'll get 3,20,000. 63 plus 76 plus 84 plus 96,500. Total will be 3,20,000. Closing stock of raw material is given in the question. What is the closing stock of raw material? 5,000 kg. Opening stock is 10,000 kg. Closing stock is 5,000 kg. Opening stock is 10,000 kg. So plus 5,000 minus 10,000. Plus 5,000 minus 10,000. Plus 5,000 minus 10,000. 3,15,000 kg. Please write unit of measure 3,15,000 kg. Now this 3,15,000 kg will be purchased in 3 quarters, 30, 50, 20. Purchase price 234. They've asked quantity and value. They've asked quantity and value. Next, quantity to be purchased. Quantity purchased 3,15,000 into 30%. Into 30% into 20% and 50%. 30, 50 and 20. 30, 50 and 20. Last quarter 0. Quantity purchased 30, 50 and 20. and 20. Purchase price. Normally same purchase price will be there for all, but here they've given different purchase price. Purchase prices 2, 3, 4. Value of purchases. Value of purchases. Multiply them. Value of purchases 189. If these numbers are fine. Ideally, I could have added a total column also. We should have added a total column. We did quarter wise. Everywhere we could have added a total column. We should have added, in fact. Any doubts in this? Clear? With this, the question is over as far as my discussion is concerned. Price to ledger, what will happen is opening stock. You just listen. Opening stock 10,000 kg. Opening stock 10,000 kg at the rate of rupees 2. How rupees 2? Value is 20,000. Value is 20,000. Q1 purchase 94,500 into 2 1,89,000. 94,500 into 2 1,89,000. Q1 consumption 63,000. So you will write first opening stock by same rate, so you add it to the lot. Consumption 41,500 into 2 now. 157 you bought. 41 write separately, 157 write separately. Then again consumption, again purchase, again consumption, and in the end you have 5,000 into 4. In the end you have 5,000 into 4, 20,000. 5,000 into 4, 20,000. Any doubts on this? Any doubts on this? I'm going to take a break now, but before that I just discuss a small thing and then we take a break. This question, what we did was, we did production is equal to some percentage of current quarter plus some percentage of next quarter. What can be the other way around? The other way around is this. They give April, May, June, July sales. Jigyasa Limited is drawing a production plan for its 2 production. The company's policy is to hold closing stock as 25% of the anticipated sales of the next month. So this month sales, closing stock is 25% of next month. 25% of next month. What would have been the opening stock? Closing stock of previous month. What is closing stock of previous month? 25% of the next month sale. 25% of the next month. So you can do this also. Sales, add closing stock, less opening stock, production. Sales, add closing stock, less opening stock is production. This is another way of doing the budget. I don't want to do this budget, but this is another way of doing the budget. Sales, add closing stock, less opening stock, production. If they say production budget and they don't mention quantity or value, you have to do both, quantity as well as value. If they specify quantity, only quantity. If they specify value, only value. Any doubts on this? Any doubts? This is another variant of the budget. We'll take a break of around 45 minutes. I'll resume at 1:45. We'll try to cover it. I think by 4:30 we should be able to do today. We'll resume again at 1:45. Okay, we are now going to proceed ahead. Just a minute. Okay, so till now we are done with all the concepts of budget and budgetary control. Some questions I have to solve, but I'm just going to spend 10 minutes to give little bit of clarity on what you need to do for the balance chapters and what strategy you can adopt so that you complete your preparation of costing as soon as possible and then move on to the other subjects. Now, in the classes we have covered 7 chapters extensively and introduction is also covered, so 8 is covered in the classes. You are left with 7 more chapters. In the 7 chapters, unit costing and batch costing and job costing will not take much time. These 2 chapters are very limited. They do not have lot of coverage in the material, so it is kind of possible for you to quickly complete them. Other chapters are little bit time consuming ones. Something like overheads is a time consuming chapter. Even a chapter like cost accounting system or be it standard costing, joint and byproduct process costing, they can end up taking decent amount of time for you to do your preparation. Now one way is you do it with my concept book which is given to you along with the 160 questions material I had shared. So I had told you to access this at this place. This was the link given to you. If you go to CA Inter Costing, you will see a lot of folders here. Now what are these folders? These are something which you should ideally use. If I go to RTP, I see an RTP September 25 word with redrafted. Redrafted is nothing but ICI has a way of answering it. Some students find it difficult to understand. So I have the same ICI question. Answer is not in ICI format. Answer is in my usual class format. My format is slightly different. I try to standardize things. So it's the same set of questions only, but they'll be available in the format which is easier for you to understand. So any RTP you want to cover, because one of the feedback was that how do we cover RTP, MTP was one of the feedback saying that we had not covered that in the classes. I've not covered it extensively in the classes. Whichever is critical, I've covered it. But if you still want to cover all RTPs, MTPs and suggested answers, download the RTP, MTP from this place. And if you open the RTP, MTP question, you will see the question. I also write whether it is same as or similar. Some comments will be there in every question. Same as indicates that there is nothing there in that extra question. It is same as what is there in our material. You can either skip it or you want to do it again, you do it. So every RTP will have some comment against it. Similar will indicate that there is some extra adjustment. Same will indicate that almost the same question is there. Now the book which I have been using covers RTP till May 25. Does it cover all questions of RTP till May 25? Straight away answer is no. I have removed lot of questions because some of the RTP, MTP questions are extremely challenging. I don't expect ICI to test those questions in exam, so I have removed those questions. You still want to break your head going through those questions, you go through the RTP which is released in the that folder where it is there. You go through the RTP. There are some questions which even if I do it in the class may take 1.5 hours of my regular class itself. I've removed those questions because I don't want to waste time doing those questions and I feel they may not get tested. RTP, some of the RTP questions are extremely challenging and as well as MTP question. Can you still do it? It's up to you. You want to do it, you do it. But I at least don't feel the need for to do those questions. So I have removed some of those questions in my material. But otherwise, it covers RTP till May 25, suggested answers till Jan 25, and MTP till May 25. After this, ICI release September 25 RTP. You see that in that folder. They have released May 25 suggested answer. I'm not getting time to do that. I have to do that also. And MTP till May 25 is there. After that, ICI will release the new MTP. That also will go in this folder. So you want to go to your late previous RTPs and see it fully. Open September 24 RTP. You go through it. It will have answers and the comment will be there similar, same. That time I was having edition 2 book. So the comment was on edition 2 book. Now I'm having edition 4 book. So the comment is based on the edition 4 book. But it will say whether it is a similar question, same question, any new challenge, not a challenge. You will understand that. You want to practice MTP, RTPs, please practice it from this place. Anybody who wants to practice MTP, RTP, you have to practice it from this place. Even in MTP, RTP, some questions I feel they're just waste of time. ICI is just wasting students' time by putting those questions. So RTP like that 5 are there. MTP around 8 MTPs are there till May 25 exam. Every attempt 2 RTPs, 2 MTPs will be there. Any MTP you want to open, you want to look at how the answers have come, because ICI gives MCQ, they give answer, they don't give any explanation. Explanation, everything will be there in this. You go through any MTP solution, you don't get explanation there. So open it, you will see the explanation being there. This is the question. Below the question number 1, how the answer has come. Question number 2, 3, 4. Every ICI question you will see an explanation. So this is as far as your MTP, RTP and suggested answers coverage. Ideally, I should have released suggested answers by now, but I got stuck with few classes and other things. Apart from that, whatever material I have used, you can download edition 4. Want to download earlier edition, that is also available, but edition 4 is the latest edition. Want to download that, or the earlier edition, that's your wish. And the priority questions material. The priority questions is material 1 and material 2. Material 2 is for September 25 and Jan 26 exam. I had released one for May 25 exam, 160 question, now also 160 question. Almost similar, some changes here and there will be there. This is on the material side, by which you can try to cover whatever is missing parts for you. And if you want to take up some chapter wise tests, there are chapter wise tests on every chapter. If at all you want to take, you can take it up. You don't want to take, don't take it. That's your wish. Okay. This is on the material which is available. Now, balance chapters. You will go to my YouTube channel, you will find a lot of playlist being there. In the playlist, one of the playlist will be CA intercosting detailed concept revision. I think, yeah, this one. CA intercosting detailed concept revision, one playlist will be there. That will have videos, and you will see videos covering various chapters. So, for example, this video covers joint and byproduct costing and standard costing. So you want to go through joint and byproduct costing, standard costing, if you're comfortable my way of teaching, but this is little faster because this video which got recorded was in 6 days we covered all chapters. But here in 6 days I've covered only 7 chapters, because students ultimately told you cover less also, it is fine, but that speed is becoming difficult. If a student is aware of the concept, they were able to follow my speed. Otherwise, it becomes little difficult for students to follow the speed at which I teach in a revision. So I voluntarily took a call, okay, let me not get into all the areas, let me cut down the areas. So I cut down the areas. But still, somebody still wants some guidance, then you may want to go through this. This will have, I think almost all chapters should be there. 1 or 2 could be not there. For example, the earlier video, this is cost accounting system, joint and product by product part 1 is there. The other system part 2 was there, and standard costing was there. Like this, almost all can be there, and maybe 1 or 2 is not there, that I'm not sure. But this playlist you can watch in case you want to go through the other chapters. For other chapters, so I do find here process costing is also there. I do find budgets and budgetary control, overheads is there, job costing is there. So almost all will be there. You can open the video. For example, if I open overheads, you click the video, there will be it would have used edition 3 concept book. Concept book is almost same only thing is now the concept book will have charts. Earlier charts were not there. Earlier descriptive part will be there, almost same thing only, but it will be in charts form now. Earlier I did not have charts. So this overheads concept 12 to 16, whichever concept you want to revise. Question number 6 I have discussed, 7 I have discussed, 8 I have discussed, 9 I have discussed, 10 I have discussed. This would have been discussed from a specific material. You can download that material, go through the video. You want to go through job costing, from 25 minutes concept discussion is there. Okay, concept and question, everything is covered there. Concept and question in 25 minutes. Labor cost, concept 1 to 8 is from 1 hour 47 minutes to 2 hours 16. Then respective questions are there. Unit costing and batch costing from 4:11:45. So you click that specific time, you go through that and be done with it. So you want to cover unit costing and batch costing, click on 4:11. I think the video is from 4:11 till 4:38. 27 minutes you cover, unit and batch costing is over, because there I have not given detailed timestamp. Whereas other places I have given detailed timestamp. You can just click it and then, but Again, the questions are mentioned here. Mostly the priority questions would have been discussed, but I'm not sure what questions are discussed in that batch. But you can take this and then go through it. In case you want to cover your balance areas, go through the timestamp. Use the timestamp properly. Click the timestamp. You want to just revise concept, just click the timestamp, revise concept, leave it. Other chapters also, whatever chapters we have done till now, any other chapter, numbering of the concept also may change. I'm not very sure, but ideally should not change. But in case it changes, don't worry about it. You just need to listen to the concept. The point is, here the concepts are in charts form. Earlier the concept were in descriptive form. That is the only difference. Numbering, I'm not sure if I've changed it or not. So any chapter I take, for example, if I take cost accounting system, first 17 minutes you spend, all concepts are covered. First 17 minutes. The only difference is, today if I take you cost accounting system, concepts itself I'll spend around 45 minutes, because I earlier, because of the time constraint I had, I was covering the concepts little faster. So that is the only difference. So if you are having grip on concept, you'll be able to understand it. Grip is little bit less, you may have to listen 2-3 times the concept again and again listen it, so that it registers. Some problems are solved. Want to follow the problems, follow. Don't want to follow the problems, don't follow. That's your wish. But again, I'm repeating, other chapters cover it with this. Would it exactly match edition 4 material? No, it is not going to match edition 4 material. I'm making it very, very clear. It is not going to match edition 4 material. I think I would have used either an edition 3 material, or I would have used some other material. I would have created a specific material for this batch. This is the material. The link is available there. So, okay, edition 3. We have used edition 3. Theory book of edition 3, question bank of edition 3, concept book of edition 3. So, edition 3 is what has been used in these videos. Edition 3 and edition 4, are there changes? Yes, question bank changes are there. Concept book, minimal changes will be there. Clear? So, you want to go through these questions, go through them. You don't want to go through the question, don't go through it. Any chapter which we have completed, you want more clarity, repeat seeing this itself. I may not upload the current revision, I'm yet to take a call. But in case you want to revise any chapter, for example, this is marginal costing, concept 16 and 17, then 12, 13, 14, 15, 16, concept 18, absorption versus marginal. In my latest material, this is concept 16. So concept numbering also changed. Maybe I would have removed some concepts also. Then cost sheet, all concepts, 42 minutes, initial 42 minutes, all concepts. Now when I took more than that. I know the amount of time I've spent for concepts. That is the only difference. So anybody who wants to revise technically entire costing, what we have done is, okay, you want to revise entire costing, go through this. Go through this, you'll be in a position to revise entire costing. 4 hours, put together could be some 40 hours or so, but it may cover all the chapters. It may end up covering all the chapters. The first video covers cost ABC chapter and marginal costing. ABC and marginal costing is covered in the first video. Like this, I would have covered almost everything, because the main areas which are left over is cost accounting system, which is there in this video. Standard costing, again there, but standard costing you'll find it difficult because I have a different way of teaching it. There is something called as a charts method. Unless you follow the charts method, you'll find it difficult. So that is there. Standard costing is there, which is covered in these videos. The third one is your cost accounting system is covered, standard costing is covered, joint and byproduct costing is covered, process costing is also covered in this, unit and batch costing is also covered, and the job costing is also covered. So everything is covered in this. Your job is to keep going through this and you'll get clarity. Clear? So this were uploaded in November 2024. It is not that they are very old and all. They are very much relevant for your exam. The only difference, again I'm repeating, the difference is they were covered with a little bit faster pace. The pace will be faster. And this time when I'm doing, I have cut down on the pace side. I have also tried increasing the number of problem, but not more on problem. My more focus was on concept rather than on problem. Earlier, the focus was more on problem rather than on concept. So students said, problem somehow we will manage it, but you give more concept, So that is how the reason to bring it down to 7 chapters was only one, because some students have highlighted saying that why can't we do all the 15 chapters? I used to cover all 15 chapters in 3 days. That used to be one of the time where I used to do 8 hours into 3 days and all chapters were covered. There is one video in my YouTube channel for 21 hours where all chapters are covered. All chapters are covered. But again, you will find it difficult to go through unless you are having clarity on the concept. The problem is some of the students will have clarity, but some of the students will not have clarity. So I used to upload this revision, and this is what many students used to see. See, intercosting full revision. This was uploaded in 2019. It was for 21 hours. But again, the challenge is you will find it difficult to go through this 21 hours video unless you have clarity on concept. So this video also, many students found it easier to go through this. Around 42,000 people have watched it. Very easy, only provided you have clarity on concept. The point is, concept not known, student will not be able to do it. So again, my earlier revision, everything was problem based focus. Why we shifted to concept is, one, the earlier videos when we were taking, it was taken for my own set of students. So when I was taking for my own set of students, they were doing my regular class fully. Somewhere they were having some grip on concept, and then they were doing it. Then later on, we tried opening it for all. When we opened it for all, we found some students were having little bit of concept gap. Our own students also had some gap. So then we ultimately decided that from the last two batches onwards, the focus is on concept. We are cutting down on the chapters. So 6 days I took, I cannot increase it beyond 6 days, because beyond 6 days will not make any sense. Some students have in the feedback highlighted that can we take more than 6 days? Wouldn't really be possible, because you need to focus on other subjects and I also need to do my other classes. So to cut it simple, other chapters resources are available in my YouTube channel. Only thing is, you may see me in a YouTube video rather than seeing me in a live video. That's all. That is the only difference. For your MTP, RTP, again PDFs are uploaded. You go through the PDF, but one caution I again repeat now itself. I see some of them have extremely challenging question. I ideally don't expect ICI to test those questions. Costing itself is okay. FM, they have made it more and more complicated by adding some question which even a CA final student will not be able to answer. I know those set of questions which are there. I don't know why they ask in MTP, RTP. Final exam, if they ask, then I can understand. Final exam have not been that tougher. Final exam haven't been that tougher. But MTP, RTP, they have made it certain questions very, very challenging. I'm making it very clear. There were some questions which even for me took 2-3 times reading, and then only I could understand what they have asked, and then we can get to the answer. So this challenge will be there when you go through your MTP, RTPs. The challenge will be there, and if you go through MTP, RTP, you're not getting an answer, getting demotivated will not really help. That is why we have cut down the questions in my material. I have removed lot of questions in the last 2-3 material which I release. Reason for removal is very simple. If I add those complex questions, you are not going to anyway understand it, and unfortunately focus of students shifts only on those complex questions. You are trying to break your head as to why you are not understanding that complex question, rather than the questions which are, I have added some of the difficult questions, like one question which we did today where we had that budgetary control question where they had said 12% tons increase and all. That is a complex question taking time, but that is not something which is impossible for a student to do, and it was a study mat question. But RTP, MTP, extremely challenging questions are removed from my material. You still want to go through it, I'm not going to say no to you, that's up to you. But where do you want to go through, that I've already released a material. So please go through from the PDF, whichever you want to. You want to consolidate everything, download all PDF, merge it together, you'll get one PDF and everything gets consolidated there. Whichever you want to see, you see it. Clear? This is on your balance. I'll now go back to your the other areas, which is your functional budgets, which we were doing. We'll try to cover them. But other chapters, simple strategy, in my YouTube channel, go to playlist. In the playlist, you will find a playlist called, there are multiple CA intercosting revision playlist I have. One playlist will be called detailed concept revision or something. So you go through that that one. CA intercosting detailed concept revision, which was last updated on 23rd January 2025. This playlist will be very useful for you to understand things. Apart from that, there are a lot of other playlists. That is okay, but this is the most important playlist you can see if you want to get grip on the balanced chapters. And standard costing, if you are not able to understand there and you have time, there is a 7 videos. It will go to around 15 hours, but entire standard costing would be covered in a very slow manner in case you have time, because many students struggle with standard costing. They struggle with standard costing, they don't even understand, so they struggle with standard costing. You want to understand in depth standard costing, then open this playlist. You will find around 7 videos being there. Go through the first video at normal speed, other videos 1.5x 2x speed. You see, you'll be able to complete entire standard costing in around 10 hours, 15 hours video, 1.5x speed if you do. If at all you have time, you can do that. Else, go through the revision video. Other chapters is easy to follow, even my earlier revision, but standard costing will be challenging. I know the kind of challenge students face in standard costing. So there, I give a choice to you. I give a choice to you. It all depends on how much comfort you have. If you don't have comfort, go through in depth. If you have comfort, no problem. Clear? Done? Let's get back now. Let's come to question 14. Nakata Limited, a vehicle manufacturer. You go through the question. Go through question 14. First, you go through it. Then I'll discuss. Okay, let's understand this. I don't think so solving will be needed, but one concept I wanted to explain here. Nakata Limited, a manufacturer, has prepared the sales budget for the next few months. Sales is given from October to February. Now listen, if you have October to February sales, production can be done for 1 month lesser only. Calculation. If you have data for February month, then only January production you can calculate. If you have data for March month, then only you can calculate Feb production. Why? You will understand. To manufacture a vehicle, cost is 571,400. Uniform selling price, commission of 15% to the dealer. Apart from other material, 4 units of part X are required to manufacture a vehicle. Raw material consumption is production into input by output. Input output is 4 is to 1. 4 is to 1. It is a policy of the company to hold stocks of part X at the end of each month. At the end of each month, to cover 40% of next month production. Closing stock of raw material is equal to 40% of next month requirement of production. What is requirement of production? Is raw material consumed. Raw material consumed. 40% of next month's requirement. 48,000 are in stock. 9,500 vehicles are in stock on 1st October, and stock at the end of each month is what? 20% of next month sale. 20% of next month sale. So with October to February, I can get January closing stock. February closing stock not possible. What is production? Sales plus closing stock minus opening stock. So with this, you can calculate October, November, December, Jan, Feb is available for sales. Production you can do October, November, December, January. Production only these 4. Production only these 4. February you cannot do. How will you do production? Production is sales of that month, closing stock of that month, which is depend on the next month, less opening stock given in the question. Closing stock becomes opening stock for next month, and you get production. With this, you will get raw material consumed, which is also 4 months. Raw material consumed is also 4 months. What is raw material consumed? Production into input by output. Production into input by output. With 4 months consumption, you can get only 3 months purchases. You can get only 3 months purchases. Why 3 month purchases? Because closing stock is equal to 40% of next month RM consumed. 40% of next month RM consumed. So exam sometimes will give all this data and they ask you purchases only for 3 months. Purchases only for 3 months. Nothing else is asked. Purchases only for 3 months. So students think purchases for 3 months, consumption for 3 months, production for 3 months, sales for 3 months. You will not get the answer. With 3 month production, you can get 3 month consumption, but 3 month purchase is not possible. So always look at the data. Anyway, in this question, they've asked properly only. They have said calculate for what? October, November, December, and January. Even if they had not asked January, you have to do January production. Even if they don't ask, you have to do January production. Then October, November, December purchase budget, because January not possible. Purchase not possible. Consumption possible. Purchase is not possible. Consumption is possible. Purchase is not possible. Clear? Any doubts in this? Any doubts in this? Understood this? I'm not doing it because it is very simple. Sales, add closing stock, less opening stock, production into input by output, raw material consumed, then raw material consumed, add closing stock, less opening stock, raw material purchased. Clear? Any doubts on this? I will do this question. It's a very good problem. Has not been tested in exam. It's an illustration in study mat, but an excellent question. Let's discuss this now. A company is engaged in the manufacture of specialized subassembly required for certain electronic equipment. Company this itself will take away 20-25 minutes of our class, but this is a very good question. Company envisages that in the forthcoming month, December 2006, sales will be in the ratio of 3 is to 4 is to 2, 3 is to 4 is to 2 respectively of ACB, MCB and DP. ACB, MCB, DP are finished product of mine. ACB, MCB and DP are finished product, and I'm going to sell them in the ratio of what? 3 is to 4 is to 2. Sub-assembly selling price is given. Sub-assembly is ACB, MCB, DP. Selling price is given. Baseboard and component requirement. What is baseboard? Is raw material. The following is the schedule of component. 1 unit of ACB needs 1 baseboard, 8 IC8, 4 IC12, 2 IC26. 1 unit of MCB needs 1 baseboard, 2 IC8, 10 IC12, 6 IC26. 1 unit of DP needs 1 baseboard, 2 IC8, 4 IC12, 8 IC26. Labor and variable overhead, all this is given. Laborers work for 8 days a month. Opening stock of subassembly is given. Subassembly is my finished product and component are my raw material. Component is my raw material. Fixed overhead amount to 757 200 and I have a target of 12 lakh profit. Closing stock should go down by 10% as compared to the opening stock. Requirement: sales budget, production budget, component usage is raw material consumption budget, component purchase budget and manpower budget. And manpower, all the budgets have been asked, but the starting budget is sales budget. The starting budget is sales budget. They have asked all the budgets, but the start is sales budget. How do I calculate sales? Because normally sales will be given in the question. Every problem we do, sales will be there in the question. How do I get sales here? I had explained when I was explaining the theory. How will we get sales here? This is the data. Somebody in live online, if you can spot it. How will you get sales here? Go through it. Let me know. Okay, one student has highlighted. I've got the answer. I'll explain. Here they have given profit. They have told fixed cost. Sales to achieve desired profit is equal to desired profit plus fixed cost by contribution per set. Why set? You have 3 products. Contribution per set. Sales to achieve desired profit is equal to desired profit plus fixed cost contribution per set. Let's start. Working note 1. Computation of. It's a very good question. Computation of contribution per unit. Contribution per unit. I can do table, but I'm not doing it in table. I'm doing it like this itself. ACB equal to 520 rupees selling price minus 520 rupees selling price minus 1 unit of baseboard, which is my raw material, 8 units of IC8, 4 units of IC12, 2 units of IC26 and some variable overhead, labor cost. All that is given in the question. So 520 is my selling price minus 1 into 60 baseboard minus 1 into 60 is baseboard, 8 into 20 IC8, 8 into 20 IC8, 4 into 12 IC12, 2 into 8 IC26, 1 into 60 8 into 20, 4 into 12, 2 into 8. Ideally, you should do it as a table, okay? I just want to save some time, that's all. Variable overhead 36 minus 36. And labor cost is 8 hours into 5, 16 hours into 4. 8 hours into 5, 16 hours into 4. 8 hours into 5, 16 hours into 4. Deduct all of this. How much you get? 132. Other product we are not doing it, okay? I'm copying the numbers because I don't want to waste time here, okay? 132 for the first product, not 132, 96 it says. Check. It says 96. Can you check the calculation? 36 did you subtract? Variable overhead 36 rupees. Okay. 96 per unit. 96 per unit. Others are 130 per unit, 62 per unit. I don't want to waste time here. One product we have done, other products we have copy pasted. Clear? Now we're going to use the formula sales to achieve desired profit. The problem for us is we do not have one product. We have three products and they are going to be sold in the ratio of 3 is to 4 is to 2. They are going to be sold in the ratio of 3 is to 4 is to 2. Now right, it is assumed one set contains 3 units of ACB, 4 units of MCB and 2 units of DP. It is assumed one set contains 3 units of ACB, 4 units of MCB and 2 units of DP. Contribution per set equal to 96 into 3, 130 into 4 and 62 into 2. 96 into 3, 130 into 4, 62 into 2. 62 into 2. 932 per set, a student has highlighted. 932 per set. 932 per set. Clear? Yeah, confirmed by another student also. 932. Sales to achieve desired profit is equal to sales to achieve desired profit is equal to desired profit plus fixed cost divided by contribution per set. Desired profit plus fixed cost. If you do just this fixed cost by contribution per set, break even point. They've asked us a specific profit they want. 12 lakh is the profit and fixed overhead 757 200. 12 lakh profit 757 200. 12 lakh plus 757 200 by 932. 2100 set. 2100 sets need to be sold. 2100 set have to be sold. Clear? Any doubts on 2100 set? Can you proceed? Now we will do working note to sales budget. Sales budget in quantity and value, both they've asked. So we'll do quantity and value. Sales budget, particulars 3 products. Particulars 3 products and a total. Particulars ACB, MCB, DP total. ACB, MCB, DP total. This is very simple. Units to be sold, selling price, amount of sales. That's all. Once you got that information, it is very simple. Units to be sold, selling price, amount of sales. We had decided one set contains 3, 4, 2 of the respective units. So units to be sold 2100 into 3 into 3, 2100 into 4, 2100 into 2, 6300, 8400, 4200, 3, 4 and 2, 3, 4 and 2. Selling price is given in the question 520, 500, 350. Once you multiply, thereafter you can put a total and write the total sales. Eighty-nine forty-six. 8946. Any doubts on the sales budget? Sales budget is for different finished products. We have three finished products: ACB, MCB, and DP. Working note 3. Question has asked for sales budget, which is done. Production budget, only quantity. Working note 3, production budget. Again, particulars in three products. Production budget. Particulars in three products. Sales, add closing stock, less opening stock. Production. Sales, add closing stock, less opening stock. Production. Add closing, less opening. Production. Sales is, we have calculated 6300, 8400, 4200. Opening is given in the question. Let's write them first. Closing, they've mentioned something. Opening stock is given in the question. Closing, they've mentioned something. Opening stock given in the question is 800, 1200, 2800. 800, 1200 and 2800. Closing stock should go down by 10% as compared to the company is eager for reduction of closing stock of sub-assembly and component. Both have to go down by 10%. Both have to go down by 10%. So go down by 10%. 800 minus 10%, 720, 1080, 2520. Get the production number. Get the production number. Six two two zero 8280 3920. Any doubts on this? Clear? Can you proceed? Okay. Working note 3, for working note 4, component usage budget. Component usage budget. The name given is component usage. In simple words, raw material consumption budget. Component usage budget. Component is raw material here. Component usage budget Technical name is raw material consumption budget. Raw material consumption budget. This is a very lengthier calculation. We have around 4 raw materials. So whenever you do component usage and component purchase, particulars and 4 raw material. When you do sales and purchase budget, particulars and 3 subassembly. Sales and production, particulars and 3 subassembly. Component usage and component purchase, particulars and 4 raw material. So particulars and 4 columns. Particulars and 4 columns. Particulars, baseboard, IC8, IC12 and IC26. Now, if I had only one finished product, it would have been simpler. We have multiple finished product. Formalize production into input by output. Production into input by output. But first, right, for ACB, production input output ratio, raw material consumed. Then right, for MCB, production input output ratio, raw material consumed. Then for DP, production input output ratio, raw material consumed. Then you will get finally total raw material consumed. It's a very lengthy calculation. Production input output ratio, RM consumed for first finished product, second finished product, third finished product, and then add up. Production, right, 39, sorry, 6220 at all the 4 places. 6220, it is the production of ACB. It is basically the production of ACB 6220. All the places 6220. 8280, all the places. All the places 3920. It is nothing to do with the raw material name, okay? 6220 is the production of ACB at all the 4 rows. 8280 is the production of MCB. 3920 is the production of DP. Now let's write input output ratio one by one, okay? Listen, for ACB, this is the input ratio. 1:1, 8:1, 4:1, 2:1. For ACB, the raw input output ratio for baseboard is 1:1, IC8 is 8:1, IC12 is 4:1, IC26 is 2:1. 2:1. Able to understand this? Now write 1:1, 8:1, 4:1, 2:1. Please multiply and write 6220 into 1 by 1, 8 by 1, 4 by 1, 2 by 1. Into 8 by 1, into 1:1, 8:1, 4:1, 2:1. This was for ACB product along with different raw materials. Good part, they gave row wise like this. It can be column wise also, but you will have to write the right ratio. 1:1, 8:1, 4:1, and 2:1. Then for MCB, 1:1, 2:1, 10:1, 6:1. I'm writing it here. You keep writing and then refer the screen in the end. Do it and then refer the screen. I've got the answer from a live online student. Complete it and then refer. Multiple finished product, multiple raw material consumption budget, headings will only be raw material. Sometimes students take the finished product as the heading. No, raw material will only come as heading. Particulars and 4 raw materials. Clear? Any doubts on this? Can you proceed? Next, raw material purchase budget. Raw material component purchase budget, they have said. Working note 5 is component purchase budget in quantity and value. Component purchase budget. Particulars and 4 products. Particulars and 4 products. Component purchase budget. Component purchase budget. Starting is raw material consumed. Raw material consumed. That's a starting. Raw material consumed is the start. Raw material consumed is the start. Clear? Add closing stock less opening stock, raw material purchased, purchase price, value of purchases. It's straightforward. I really don't have much to explain as long as you have grip on the concept side. Multiple products are there, so we have to write it multiple times. Purchase budget only one time because production doesn't influence now. Consumption, add closing minus opening. Opening is given in the question, closing they mention what to do. Consumption, consumption for the 4 products is done. Tell me the opening stock figures. It is there in the question. Opening stock figures 1600, 1200, 6000 and 4000. This has to be subtracted and closing stock is 10% lower. Closing stock is 10% lower than opening stock. Get the RM purchased. 18 to 60 7404. If you get anything different, let me know. Any calculation errors if you find. These are the numbers I have found. Can you proceed? Purchase price is there in the question. Purchase price 60, 20, 12 and 8. 60, 20, 12 and 8 in the first table. 60, 20, 12 and 8. Clear? Last budget there was manpower budget showing the number of workers and the amount of wages payable. I have to calculate number of workers as well as the amount of wages. Working note 6, manpower budget. Manpower budget. Normally we do only till component purchase budget, but this question is asked for manpower. In manpower budget, I have to calculate number of workers and wages payable, and I have two types of worker, grade A and grade B. Particulars grade A, grade B. Grade A, grade B. Grade A, grade B. Now listen, as I said, it is continuation of production, so it is same as raw material consumption. Just this production hours per unit, hours needed, hours per unit and hours needed. Then MCB, hours per unit, hours needed. DP, hours per unit, hours needed. And finally total hours needed. Finally total hours needed. It is based on same production. It is based on same production, right? Product particulars grade A, grade B. For ACB, production hours per unit, hours needed. For MCB, production hours per unit, hours needed. For DP, hours per unit, hours needed. And finally total hours needed. Production hours per unit, hours needed. Again production hours per unit, hours needed. Again production hours per unit, hours needed. I can even do it as a single line also, but I prefer doing it this way. Three products. ACB production 6220. We have to write hours per unit, hours needed. MCB 8280, hours per unit, hours needed. DP 3920, hours per unit, hours needed. We start with the first one. 6220, 6220. Grade A, how many hours are needed for 1 unit of ACB? Grade A, how many hours are needed for 1 unit of ACB? Live online guys, participate. How many needed for 1 unit of ACB? Grade A and grade B, how many hours needed? 8 and 16. 8 and 16. The second product is 6 and 12. Third product is 4 and 8. Right? 8, 16, 6, 12, 4, 8. Multiply and get the total, ultimate total. Multiply now. 115, 120, 230, 240. It's a lengthy computation, but concepts are clarity there. It will be easy for you to do. Any doubts on this? So I overall need 1,15,000 hours in a year. In a year, or sorry, in a month. This is monthly calculation. And question says, tell us how many workers are needed and the amount of wages payable. How many workers are needed and the amount of wages payable. One worker will work for 200 hours a month. One worker will work for 200 hours a month, and one worker would be paid 200 into 5 and 200 into 4. One worker would be paid 200 into 5 and 200 into 4. One worker will work for 200 hours in a month. 25 days into 8 hours per day. 25 days into 8 hours per day. One worker will work for 200 hours. 200 hours a month, and 200 into 5 and 200 into 4 will be paid. Clear? Any doubts on this? Next, number of working hours per employee. Working hours per employee, 25 into 8. Once you divide this, number of employees needed. One employee will work for 200 hours. I need 115, 120 by 200. 575.6 rounded off to 576. 1151.2 will be rounded up upwards because I need that extra 0.2 employee to complete production. I need extra 0.2, which means I'll have to round it up to upwards number 1152. Companies in the practical may have little bit more employees also, but this is the requirement. 576 employees and 1152 employees. 576 employees and 1152 employees. Any doubts on this? Wage cost per employee. Wage cost per employee. Wage cost per employee. Per employee. Per employee, we are going to pay 200 into 5 and 200 into 4. Per employee, we are going to pay 200 into 5 and 200 into 4. Total wage cost, multiply, that's all. 576 into 1000. Nine 21 600. Any doubts on this? Clear? Able to understand? It's very comprehensive question, covers most of the adjustments which I wanted to do. Any doubts in this? Clear? Can we proceed? Go through 17. Go through 17. Test your knowledge. Question number 8. Go through this question. Go through the question. Okay, I will take you through this. Concord Limited manufactures two products using two type of material, one grade of labor. Two products, two raw material. You'll have to do it like the previous question. There were three products, three raw material. Shown below is an extract from the company's working papers. Budgeted sales is given. So sales is given directly. No need to apply any formula. Budgeted material consumption per unit. Input output ratios 5 is to 1, 3 is to 1, 4 is to 1, 6 is to 1. And standard labor hours is 3 hours per unit and 5 hours per unit. X and Y will cost 4 and 6 per kg. Labor at 25. Overtime premium is 50%. It is payable if a worker works for more than 40 hours a week. This I tested in one of the MCQ earlier when I was explaining. Works for more than 40 hours a week. So here they'll be asking for a manpower budget. But question is very clear. There are only 180 people. Last question wanted us to calculate how many people are needed. Here we are very clear. We have only 180 people. You tell how much will be normal working, how much can be overtime working, something around that. The target productivity or efficiency for the productive hours worked by the direct worker in actually manufacturing the product is 80%. Efficiency standard time by actual time. That formula when I was explaining on MCQ, the same thing is tested here. In addition, non-productive time is budgeted at 20% of the productive hours worked. There are 4 5 days weeks in the budgeted period. 4 5 days weeks in the budget. 4 5 days weeks means 20 days. 20 days is the budgeted period, and the sales will occur evenly. Opening stock, closing stock is 4 days of sales, 5 days of sales, 10 days of consumption, 6 days of consumption. They want material purchase budget, wages budget showing the quantity. Quantity means how much you are going to buy, and value. Value means value of purchases and value of wages paid. Now, for material purchase budget, I'll start with sales budget, which is given. From sales, we will do a production budget. You can do it in a budget form, or you can just write a formula, that's okay. From production, we will get raw material consumption, and from consumption, we'll get raw material purchase. Production parallelly will also do us a manpower budget. Production parallelly will give us a manpower budget. Working note 1, production budget. Working note 1, production budget. Particulars and two finished product. Production budget always for finished product. Particulars and two finished product. Production budget. Particulars and two finished product. Two finished product. Sales. Add closing stock. Less opening stock. Production. Sales add closing less opening production. Sales add closing less opening production. Sales numbers are given in the question: 2400, 3600. 2400 and 3600. Closing stock is equal to 4 days of sales and 5 days of sales. 4 days of sales and 5 days of sales. And sales is for 20 days. Whatever sales is given, 20 days. 4 5 days weeks. 4 5 days weeks. So closing stock 2400 by 20. This will give me daily sales. 2400 divided by 20 into 4 days, divided by 20 into 4 days, divided by 20 into 5 days, into 4 and into 5. 480 and 900. Any doubts on this? 4 days of sales and 5 days of sales. Any doubts on this? Opening stock is given in the question. This will give you production. Production 2480 4300. 2480 4300. Any doubts on production budget? Clear? Working note 2, raw material consumption budget. This is also not asked in the question. Raw material consumption budget. Raw material consumption budget. Consumption budget. Now, consumption budget, when we have to do it for the finished, we have to do it for the raw material. We have to do it for the raw material. What are the raw material names here? Material X and material Y. Material X and material Y. The heading should be for raw material. That is for finished product. That is for finished product. This is sales and production is for the finished product. Consumption and purchase is for the raw material name. Same thing for product A. Production input output ratio, raw material consumed. For product B, production input output ratio, raw material consumed, total raw material consumed. Please write them properly. You may make a mistake in this question. Please take them properly and write it and then refer. Two four eight zero 2480 4300 4300. What is the input output ratio between material X and product A? Material X and product A. Participate, guys, please, please. Material X and product A. 5:1. Material Y and product A. It's given this order. Last time it was given in that order, so you may end up making a mistake. That's the caution I wanted. 4:1. 4:1. Material X and product B is 3:1, and the next one is 6:1. 3:1 and 6:1. Please complete it. This was also not needed. They wanted purchase. We have just now got consumption. From consumption, we have to move to purchase and then proceed forward. Raw material consumption budget 25,300, 35,720. 25,300 and 35,720. Any doubts on this? Can you proceed? Working note 3, raw material purchase budget. Raw material purchase budget. Particulars material X, material Y. Format is what you have to focus on. Write the proper thing. Raw material consumed. Consumed. Add closing stock. Less opening stock. Raw material purchased. Purchase price. Value of purchases. Manpower budget is very good in this. So that is where I want to spend a little bit of time. Raw material consumed, add closing stock, less opening stock, raw material purchase, purchase price, value of purchases. Purchase price and value of purchases. Raw material consumed, copy paste 25,300, 35,720. 25,300 and 35,720. 25,300, 35,720. Closing stock, the question has said 10 days of consumption. What we have is 20 days data, 10 days of consumption and 6 days of consumption. So 25,300 by 20 into 10. Divide by 20 into 10. Divide by 20 into 6. Ten seven one six. 10,716. Clear? Opening stock is given in the question 1,500. Opening stock is given in the question 1,500. Thirty-six 950. 45 936. 36 950. 45 936. Yeah. Purchase price is given in the question. Purchase prices, somewhere it is there in the question. 4 and 6. Value of purchases. Value of purchases. 147 800 and 275 616. Any doubts in this? Clear? The most important is manpower budget. Here, where we have to understand that efficiency formula, some downtime, and they're also talking about normal working, overtime working. All this we'll have to evaluate here. Any doubts till this? Working note 4. Manpower budget. Manpower budget. Particulars calculation amount. Only one worker is there. Particulars calculation amount. Calculation amount. calculation amount, hours needed for product X. அப்படியே அங்க உள்ள போட்டு சொல்லுங்க. Hours needed for product X. Product X production is 2480 2480, and every unit of product X need 3 hours. Every unit of product X need 3 hours. Product A 2480 into 3, 2480 into 3, 7440. Product B is 4300 into 5, 4300 into 5, 4300 into 5. Total standard hours needed. Total standard hours needed. $28,940. Total standard hours needed 28,940. 28,940. Now listen. It says efficiency is only 80%. If efficiency is 80%, I wanted 28,000 hours. People will take 35, 36, 40, 45 some extra hours because they are not fully efficient. They are not fully efficient. So next write efficiency. Efficiency 80%. Actual time needed. Actual time needed. Now efficiency formula is ST by AT. Hence AT is equal to ST divided by efficiency. AT is equal to ST divided by efficiency percentage. ST is 28,940. In 28,940 work should get over. Work should get over in 28,940 hours divided by 80%. Divided by 80%. 36,175 hours will take. The work should have got over in 28,940, but it will take 36,175. It will take 36,175. It should have got over in 28,940, but it doesn't end here. On top of this, there's a non-productive downtime, which is 20% of the productive hours. This adjustment I did in an MCQ form where I told you the standard time and other things were discussed there. So here in a descriptive question, you have to do every step and then finally come to this adjustment. Next, add provision for downtime. 36,175 into 20%. Whatever time we work on that 20%. 7235. Total hours needed. Total hours needed. People are not fully efficient, so we end up needing 43,410 hours. We need 43,410 hours. If they were fully efficient, we would have needed only 28,940. But in the end, we are needing 43,410 hours. Now, in this 43,410, some labor you will pay 25 per hour. But some labor you have to pay 25 plus extra 50% overtime. 25 plus extra 50% overtime you have to pay. 25 plus extra 50%. Question says 180 people are there. 40 hours a week is normal working. 4 weeks we have. 4 weeks analysis. We have 4-5 days week. 40 hours normal working. So 180 into 40 into 4 is normal working. Balance is overtime. Balance is overtime. 180 people into 40 hours per week into 4 weeks. Into 4 weeks. Now write normal hours. Normal hours. Normal hours. 180 workers into 40 hours into 4 weeks. Into 4 weeks. How much? Overtime hours, balances overtime. Balances overtime. How much? Labor cost 28,800 pay 25 rupees and extra pay 37.5. What is 37.5? 25 plus 50% extra. 25 plus 50% extra into 25, 14, 610 into 37.5. Put together, we have to pay 19 lakh 87,875. Clear? Again, a very good problem testing the concepts which we wanted to do. Any doubts in this? In this question, if number of workers was not given, they would have asked for man, how many workers are needed. That can be one question which we saw in the previous one, and here overtime and normal breakup. Any doubts in this? What are you getting? Sorry? Okay, sorry, then I could have made a mistake. 12 lakh 67,875. Any doubts on this? Clear? Can you proceed? Okay, let's come to question 20. Again, I've discussed it in an MCQ form, but we'll discuss it here. Come to question 20. G Limited manufactures two products called M and N. Both products use a common raw material Z. Raw material is purchased at 36 per kg from the market. Company has decided to review inventory management policy for the forthcoming year. Following forecast information has been extracted from the departmental estimates for the year ended 31st March 2016, which is the budget period. Sales, finished goods stock increase by year end. Finished goods stock increase by year end. Post production rejection rate. Post production rejection rate. Material Z usage. Material Z wastage. Raw material also has some wastage part. Usage of raw material is constant. Annual cost of holding one unit of raw material is 11%. Carrying cost is 11%. Ordering cost is 320. Management cannot place more than 40 orders in a year. They've asked us to prepare production budget for product M and N, purchase budget for material Z, EOQ. We are not going to do EOQ. And if there is a single sole supplier who do not sell more than 4,000 kg, what happens? This part 3 I'll explain. First, we have to do production budget for product M and N, then material purchase budget for material Z. Material Z. Working note 1, production budget. Production budget. Particulars in two products. Product M and product N. Product M and product N. Sales add stock increase. Sales add stock increase. Sales add stock increase. Good production needed. Good production needed. Provision for wastage. Final production. Good production needed. provision for wastage, final production. Final production. Doing it part 3 I want to discuss, otherwise part 1 is already done in MCQ form. Part 3 I could not convert into MCQ. Sales 28,000, 13,000, 28 and 13. Finished goods stock increase by year end. By year end, 320, 160. 320 and 160. Okay, listen. Final production is 100 slash 100. Two products. Okay, first product 100, second product also 100. Rejection is 4 and 6. Post production rejection rate is 4 and 6. So 4, 6, and good one is 96, 94. 96 equal to 28, 320. 4 is equal to what? 100 is equal to what? 96 is equal to 28, 320. Production has to be 29,500 and 14,000. Production has to be 29,500 and 14,000. Any doubts on this? Clear? Can you proceed? Working note 2, raw material, consumption budget slash purchase budget, both are same here. No information on closing and opening stock of raw material. Raw material consumption budget slash purchase budget. Consumption budget slash purchase budget, particulars calculation amount. Again, a very, very good question. Consumption budget slash purchase budget. Okay, listen. It is on production. First, we'll write production for product M, production, input output ratio, units consumed. But the only thing is there is also a wastage which needs to be analyzed. Material Z usage per completed unit 5 kg, and there is a wastage of 10%. Wastage of 10%. So what you use is only 90. 100 if you buy, 90 you use, 10% get wasted in when you produce product M. And when you produce product M, 5% get wasted. There is wastage in both. There is wastage in both. Here 10% wastage, there 5% wastage. So right, for product M, production 29,500, 29,500, 29,500. Raw material needed per unit, raw material needed per unit, raw material needed per unit. I wanted 5 kg only. I wanted 5 kg only. Good raw material consumed into 5. Good raw material consumed. Good raw material consumed 29,500 into 5. But then there is a top of it, provision for wastage and final RM needed. Provision for wastage and final RM needed. This is only for product M. Like that, we have to do product M. Now listen, what is final RM needed is 100. Wastage is 10. Good raw material consumed is 90. In the case of first product, when you produce first product, 10% wastage. 10 raw material, there's only one raw material. We do not have multiple raw material. If you had multiple, then we have to do each raw material one column. So 90 equal to 147, 500, 10 equal to question mark. You can round off and write the number. 90 equal to 147, 500, 10 equal to question mark. It will be more, Monica, just check. It will not be 1611. 16,389. 389 plus 147 500. 163 889. 163 889. Please do it for product in and then you refer the screen. You do it and then refer the screen. Same calculation you have to do. Please do it and then refer the screen. You do it at your end and then please refer the screen. Yeah. 88 421. Put together how much? 2 lakh? 252 310. 252 310. Part 2 we are not doing, which is EOQ calculation, kgs and value. Okay. Purchase price. Purchase price 36 rupees. Value of purchases 90 83 160. Clear? Any doubts in this? Any doubts on this part? 90 83 160. Okay. Then it said calculate the EOQ, which we are not doing. If there is a sole supplier for raw material Z in the market, sole supplier means single supplier for raw material Z in the market, and the supplier do not sell more than 4000 kg of material Z at a time. So he is not ready to supply more than 4000 kg of material Z at a time, and we have a policy of not to place more than 40 orders in a year. We have a policy not to place more than 40 orders in a year, and supplier is not ready to supply more than 4000 kg at a time. When I multiply these two, I can buy only 1,60,000 kg of raw material. Lesser raw material, lesser production, lesser sales, because I wanted 252310. So next, possible production. Possible production. Maximum number of units that can be produced. Maximum number of units that can be produced. Maximum number of units that can be produced. Particulars and two columns. Ideal and possible. Particulars, ideal, possible. Ideal and possible. Ideal and possible. Raw material needed. A raw material purchased. Ideal 252310. Possible 1,60,000. Ideally, I want 252,310, but what is possible is only 1,60,000. How 1,60,000? 4,000 kg into 40 orders, maximum 40 orders. Product A, we wanted to produce product M 29,500, product N 14,000. This is the ideal scenario. Buy 252, 29,500 and 14,000. 29,500 and 14,000. This is an ideal situation. Ideal situation 29,500 and 14,000. If purchase goes down, automatically this will go down. So it is like this. You have to do this and tell me the number. 29,500 is equal to 2,52,310. Question mark is equal to 1,60,000. As purchase goes down, production will go down. If you had purchased 252, you would have produced 29,500. Purchasing only 160, production will go down. Do cross multiplication. 29,500 into 160 divided by 252,310. 18,707. 18,707. Same way here. 14,000 equal to 252,310. Production, purchase goes down, production will go down. We don't have a choice. 14,000 equal to 252,310. Question mark equal to 160. Eight eight seven eight. Any doubts on this? Clear? Can you proceed? I still want to do 2 or 3 questions. I'll take a break at this stage. Another 30 to 40 minutes of discussion is pending. We'll take a 15-minute break. I resume again at 3:40. Okay, we'll have to do 2 more questions. I think 2 more questions and then we should be done. Let's come to 21. DC Limited manufactures and sells 2 products, Super and Deluxe. DC Limited's budget department gathered the following data to prepare the budgets for 21-22. Sales, selling price, expected inventory opening, closing is given as a percentage of production. We saw that in MCQ, percentage of production. Company uses material A and B in the manufacture of Super and Deluxe. Projected data, material cost per kg, wastage is there. Material output per unit of X, Super and Deluxe, expected inventory. Cost of opening stock, closing stock is 10% more than the opening stock. FIFO method, what is the use of FIFO method? You will understand. Production budget in units, material usage budget in quantity and rupees, and material purchase budget. 3 budgets they've asked: production budget in units, material usage budget in quantity and rupees both, and material purchase budget. Go through the question. 1 minute for you to go through the question. Okay, we are going to start with production budget, which is fairly simple. Closing stock will be 0.1 production, like that we'll have to do and then close it. Then material usage budget, where wastage is to be considered. Purchase budget, why they've asked, you'll understand. There some adjustment needs to be done. Sorry, usage budget, some adjustment needs to be done. What is that adjustment? You'll understand. Working note 1. production budget, production budget, particulars and two products, super, deluxe, particulars and two products, sales, add closing stock, less opening stock, production. Add closing stock, less opening stock, production. Sales is given in the question 48,000, 72,000, 48 and 72. Closing stock is 10% of production and 8% of production. 10% and 8%. 0.10p, 0.08p, 0.10p, 0.08p. We don't know the production figure as of now. 10% of production and 8% of production. 10 and 8. Opening stock is 3,900, 7,600. P equal to 48,000 plus 0.10p minus 3,900. P equal to 72,000 plus 0.08p minus 7,600. Please solve and let me know the production figure. Solve and tell me the production figure. Live online guys, if you have completed, type it. Okay, 49,000 is what a student has informed me. 49,000. And second product? 70,000. 49 and 70. 49,000 and 70,000. Any doubts on this? Clear? Can you proceed? Second requirement is material usage budget. Normally quantity alone will they ask. Why they have asked rupee component, you will understand there is some adjustment to be done there. Material usage budget, which is production into input by output ratio. Also you have to provide wastage. Wastage is 4%. So uniform wastage percentage. Last question it was 10%, 5%, different wastage percentage with it. Particulars and two products. Working note 2, raw material usage budget, raw material usage budget, particulars into raw material, particulars, material A, material B, material A and material B, A and B, for product super, for product super, production, input output ratio, raw material consumed, wastage will provide in the end because it's the same wastage percentage. Last question we had different wastage percentage. For product super, 49,000, 49,000, 49 and 49. Input output ratio is for product super with material A 2:1 and then 3:1. For product super 2:1 and 3:1. 2:1, 3:1, 98,000, 1,47,000. 98 and 147. 98 and 147. Then for product deluxe, for product deluxe production input output ratio, RM consumed. Production input output ratio and raw material consumed 70,000 and 70,000. 70,000 and 70,000. The input output ratio is 4 is to 1, 2.4 is to 1. 2 lakh 80, 1 lakh 68. 280 and 1 lakh 68. Total raw material consumed 3 lakh 38,000 and 3 lakh 15,000. 338 and 315. Any doubts on this? 3 lakh? Sorry, 3 lakh 78 and 315. Now at this stage, provision for wastage, and final RM consumed. Provision for wastage and final RM consumed 100, 4, 96. Same percentage for both 100, 4 and 96. 100, 4 and 96. 100, 4 and 96. Three 93, 750, 328, 125. If it doesn't end here, normally it is very simple beyond this, but they've asked for value and value needs some adjustment. Here. Any doubts in these figures first? 393 and 328. Any doubts in these values? Can we proceed? Okay, now listen. Question has said, get the quantity and rupees. Rupees means I can multiply with this. Rupees is I have to multiply with this. But the problem is they are saying we are following FIFO method. FIFO method means first you will consume this and this will be consumed at 57 rupees. This will be consumed at 57 rupees. Balance from the current year, whatever balance you have, that will be at 60 rupees. That will be at 60 rupees. FIFO method, first you consume the opening stock, then you consume the current year purchases. First you consume the opening stock, then you consume the current year purchases. Opening stock is already there and that is at 57 and 75. Current year purchase is at 60 and 80. Current year purchase is at 60 and 80. Next, value of raw material consumed. Value of raw material consumed 32,500 into 57, which is the opening stock. 32,500 into 57 into 57, balance from the current year. And if they had given average cost, it would become more tricky. Average cost means you have to get the purchase quantity, then do opening stock into opening price, purchase quantity into purchase price, whole divided by total quantity and get the average price, which is what we learned when we did cost sheet. And the balance quantity 393, 750 minus 32,500, 361, 250. This will be at 60 rupees. This will be at 60 rupees. Any doubts on this? Any doubts on this? Tell me the value. Thirty-two 500 into 57, 361, 250 into 60. Live online guys, if you have done, please tell me. Let me know the value. 32 500 into 57, 2 crore 35 lakh 235 27 500. Any doubts in this? And the next period, that is for the next product it says you have 28,800 kg. Next product 28,800 kg. So 28,800 into 28,800 into 75 plus 299 325 into 80 rupees. Current year purchase is at 80. Opening stock at 75. Current year purchase at 80. The value you get is 2 crore 61 lakh 6,000. That's what a student has highlighted. Check and let me know. 28,800. Clear? Any doubts on this? Purchase budget, we are not doing it. Purchases, consumption, add closing stock, less opening stock. Opening stock is given. Closing stock is 10% more than the opening stock. 10% more than the opening stock. Any doubts on this? Okay. Till now, we have been doing individual budgets. Now a combination of all of this is called master budget. Combination of all of this is called master budget. To put it very simply, it is nothing. It is nothing but a P&L account. It is nothing but a profit and loss account where practical world organization will do a sales budget, then they'll do a production budget, then do a raw material consumption budget, then do a raw material purchase. For us, everything will be given directly. What we need to do? Product wise P&L statement. Product wise P&L statement. That is what technically is this master budget all about. Let's see one question and maybe we may do one more if time permits. Let's do first this. Information of Z Limited for the year ended 31st March 2020 is as below. Particulars, amount, direct material, direct wages, variable factory overhead, fixed factory overhead, other variable cost, other fixed cost, profit and sales. During the year, company manufactured two products X and Y. Output and cost were particulars X, Y. Output 8,000, 4,000. Selling price 600 and 550. Material cost per unit, wage cost per unit. So they have given breakup of some of the item. Material per unit, wages per unit. Variable factory overheads are absorbed as a percentage of direct wages. Are absorbed as a percentage of direct. That is variable factory overhead is a percentage of direct wages, and other variable cost is 40 and 70. For the next year, due to a pandemic, it's expected that demand will fall by 20%, 10%. Wages will rise by 20%. Other fixed cost by 10%. Products will have to be sold at a discount of 20%. So a lot of changes they have talked about in the next year. Prepare product wise profitability statement on marginal costing method for the FY 29-20 and prepare a budget for FY 2020 and 21. So we have to prepare first 2019-20 particulars, two products and the total. Then we have to repeat it for 2021, two products and total. Let's start. First we'll do it for 2019-20. Working note 1. Product wise profitability statement for FY 2019-20. For FY 2019-20, particulars, two products with two subcolumns each, totally 6 columns. Particulars, two products will have two subcolumns, per unit and total, and then finally a grand total. Particulars, two products, product X, per unit, total, product Y, per unit, total, and then overall total. We start with sales. Now I know the overall sales. Let's write the overall numbers first. Sales is 70 lakh. Sales is 70 lakhs. We have to break this into product X and product Y. We have to break this into product X and product Y. Product X, how many units sold? It's given in the question. Product X, how many units? 8,000 and 4,000. 8,000 and 4,000. So this is 8,000 units and the other one is 4,000 units. Selling price is given in the question. Selling price is 600 and 550. So 600 into 8,000 is 48 lakh. 550 into 4,000 is 22 lakh. 48 lakh and 22 lakh. 48 lakh and 22 lakh. This is the sales part. Less variable costs. Because marginal costing approach, variable cost first and then all fixed costs will do it together. Less variable cost. I have direct material, direct wages, variable factory overhead, other variable cost. Totally 4 items. Direct material, direct wages, variable factory overhead, other variable cost. Somehow we'll have to split. Fixed, if they give split, okay. Otherwise, we will not be able to split. Fixed, we normally don't split. Less direct material, direct material, direct material given separately 140 and 157.5. 140, 157.5 multiply 140 and 157.5 into 8,000 into 4,000. 11 lakh 20,000 and into 4,000. 6 lakh 30,000. Together is 1750, which is what the question would have indicated. Together is 1750. Together is 1750, which is what the question would have indicated. 140, 157.5. Next, direct labor. Direct labor 90, 90 and 132.5. 90, 132.5. 90 and 132.5. Put together 12 lakh 50. Put together 12 lakh 50. Any doubts on direct labor? Clear? Variable factory overhead, they have not given the breakup, but they have said it's a percentage of direct wages. So leave some 5-6 lines. OAR, some 8 lines. OAR for variable factory overhead. Overhead absorption rate. Overhead absorption rate for variable factory overhead. Overhead absorption rate for variable factory overhead is equal to variable factory overhead divided by direct wages. It's a percentage of wages. Variable factory overhead divided by direct wages. It's a percentage of direct wages. Variable factory overhead by direct wages. 9 lakh 50 by 12 lakh 50 into 100. 950 by 1250 into 100. 76%. Now what you can do is variable factory overhead 90 into 76%. 76% of wages. 76% of wages. 68.4. 76%. 9 lakh 50. Clear? Any doubts on this? Next, we are having other variable costs. We are having other variable costs, which the breakup is given. Other variable cost is 40 per unit, 70 per unit. Our objective was to bifurcate the cost which are given. Material breakup given, labor breakup given, variable factory or we are done. Other variable cost 40 and 70. Other variable cost, other variable cost 40 and 70. 40 and 70. 40 and 70. Clear? Contribution. Deduct all of this, we'll get contribution. Contribution. Let me know the product wise contribution. Contribution per product how much? Per unit X is how much? 20 lakh per unit. 261.6. 261.6. Then we have to do the other product. $89.3. 357 200. 24 lakh 50,000. 24 lakh 50,000. Clear? Any doubts on this? From the contribution, I'll have to deduct all fixed cost. I am not able to bifurcate this into the two products. That bifurcation is not possible. I'll have to deduct fixed factory overhead, other fixed cost, but we cannot bifurcate this into two products now. We'll just directly subtract it. Less fixed factory overhead directly in the total column, 12 lakh. Fixed factory overhead 12 lakh. And other fixed cost 4 lakh. Profit directly in the total column. Individual profit, if I have to bifurcate, I need the fixed cost breakup also, which question is not indicating anything. On fixed cost side, question is not indicating anything. Eight lakh 50,000. Clear? Any doubts on this? Okay, I'm going to explain the next period. You are going to do it. I'm going to explain it. I'll give you around 5-6 minutes so that we practice one master budget question. In the rework scenario, first thing, quantity will go down by 20% and 10%. Quantity will go down by 20% and 10%. Wages will go up by 20%. Any change in variable cost means a change in variable cost per unit. Other fixed cost by 10%. Any change in fixed cost means change in total fixed cost. One thing, if wages changes, other variable, that is your variable factory overhead, will also change automatically because it is 76% of wages. It is 76% of wages, and selling price will be reduced by 20%. Selling price will be reduced by 20%. Exactly the same statement. Selling price will change, units will change, labor cost will change, variable factory overhead because its percentage will change, and other fixed cost will undergo a change. Clear? Any doubts on this? Any doubts on this? Start doing the statement. Start doing the statement. Around 7-8 minutes for you. 7-8 minutes for you. So if you look at the statement, it is very simple. They have given the data. Now, in the statement, I'll repeat the statement now. This is the original statement. Units from 8,000 will change. 8,000 will now change to, demand is going down by how much they've said? 20% and 10%. So it will become 6,400, 3,600. Selling price will become 480, 440. Value is 480 into 6,400, 30 lakh 72, 15 lakh 84. Put together 4656. Direct material cost remains same. It remains 140 per unit into 6,400, 3,200. Put together 14 lakh 63,000. Put together 1463. When it comes to direct labor, labor cost is going to increase. Labor cost is going to increase by, they've said wages will increase by how much? 20%. So 90 will become 108 into 6,400, and this will become 132.5. It will increase to 159. It will increase to 159. 159 into 3,600, 12 lakh 63 600. Now this number will be 76 percentage of 108. 76 percentage of 108. 82 and 120.84. 82 and 120.84. When you multiply, you get these numbers: 525 312, 435 024. Any doubts on this? Other variable cost will continue to be 40. When you multiply, you get these numbers: 5 lakh 8,000. Now contribution per unit is 109.92 and negative 67.34. Overall contribution is 461,064. Fixed factory overhead remains same. Other fixed cost increases by 10%. 4 lakh 40. Loss of 1178,936. Any doubts on this? Clear? With this, I think whatever discussion I wanted to have is over. We are done with this chapter. If you want, you practice this 24 at home. It is similar question. Test your knowledge. Question number 5. We have discussed extensively. Other chapters have already told you what needs to be done. When you write your exam, completing paper can be a challenge for costing. So there alone, please try to do it in that way that you follow a rule called 1.5 minutes per mark. 1.5 minutes per mark. Keep that at the back of your mind. So if you're doing a 10 mark question, ideally not more than 15 minutes. If it's taking more time, you can complete it in another 2-3 minutes, complete it. Else leave that question and proceed to the next question. Keep in mind 100 marks somehow you have to attend. Clear? I'll end with this. If you have any doubts, clarifications, I can take it up. Anything you want to tell. Otherwise, I wish you all the best. Do well for your exams. We'll meet you again at final classes. But in case you have doubts, I'm ready to take it up. 2 more minutes. Any doubts anybody has live online, you can type it. Or I'll unmute also now. I'll allow you to unmute in case you want to unmute and ask doubts. So in case you want to unmute and ask doubts, you can ask it. Here, if there are any doubts, let me know. Any doubts? Clear?
Sir, do we have a similar session for FM also? Thank you.
No sessions for FM. Only costing we are doing. So there's a doubt whether FM sessions are there. No FM. FM I think, but I've uploaded in YouTube. Same like costing. FM is already uploaded in YouTube. Okay guys. Thank you.